Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. Le webinaire va bientôt commencer. Veuillez rester en ligne. La diffusion vient de démarrer. Tous les participants sont en mode écoute seul.
I want to thank everybody for coming. Let me know for sure before we start you can hear me fine and see my screen. Obviously, it says appointment-based trades. My name is Lee Goldstein. Just type in that you can see and hear very good, and we'll get started. Thanks, Chantal. Okay, I want to welcome everybody. I'm Lee Goldstein, the Trading Director at 10-Minute Trades. This is the first event that we've ever hosted. We're pretty excited about it. So we want to thank everybody for giving us your time on a Saturday. And I'm going to get started right away. We've got two other really great trading companies that are presenting with us. Buyside Global is one of our newest partners, and they've taken part in one other webinar with us previously, and our good friends at Rightline. I'm sure some of you know them as well. And it should be a fun day. So thanks for coming. And I'm going to get started right now. So the title of my presentation today is Appointment-Based Trades, Daily Market Movers, and the Key to Trading on Your Own Schedule. People that don't know us honestly don't know what we do. And it's always exciting to explain it for the first time. That's me. My name is Lee Goldstein. I'm the Trading Director. And I'm also the Trade Room Moderator. I'm the person that you'll spend the most time with in our company. You'll deal with me in the trade room. I do a lot of the tech support. And just remember that all the trades I'm going to discuss in this webinar are for educational purposes. It is possible to lose money trading futures. So please, we always tell everybody, trade carefully and trade wisely. And what we do, I know a lot of people that are here today are new to our company and what we do. So I'm going to do sort of a little bit of the old, a little bit of the new, and cover all the bases about what we do. We trade in a very particular way. Keep in mind that we trade futures. We're not trading stocks or options. We trade futures, and we use the NinjaTrader platform so that we have a strategy program, a software program, and it installs into NinjaTrader. However, today I'm going to cover the first and probably one of the most important elements in what we do, and it's a report that anybody can use. The key is if your software that you're trading with has a chart trader, on-screen charts, or a dome, then you can use our reports and learn how to trade, even if you don't use our software. And that's why we make these reports available to everybody. We call these reports the daily market movers. I'm going to talk about appointment-based trading, what it is, and why I like it so much. Appointment-based trading, it's really simple. It's time-based, and you'll see what I mean. You can trade and you can schedule your trades in advance on specific days at specific times, up to a month in advance if you want to. In other words, the way that it really works is every Sunday I create a schedule for all of our members, and anybody that wants the schedule, you can get it for free. And that schedule is weekly, and it shows all the events that we're going to trade in our trade room. And it also shows other events that we feel may still move the markets, but for whatever reason, we may not be having a trade room for those particular events. Now, I know that a lot of people have been taught, don't trade the news, it'll destroy your account. Totally untrue. As long as you have proper risk management and you know how to trade the news, then of course it's no riskier than any other style of trading. When I was never a profitable trader until I started trading the news, because I was a very poor discretionary trader. It was just not my strongest capability as a trader. I tried, and I tried for years to be a great discretionary trader, but it was never something that I liked. It was never something I enjoyed, and I always felt uncomfortable trading and being in the market. And then I discovered event-based trading, which is what we do. And it was sort of like a light shone on me. The world opened up and everything changed in my trading life. I finally found a method that fit me and it fit my DNA. I love the way that we trade because I'm never in the market. I'm in the market less usually than 10 minutes a week. So all of the things that I hated about discretionary trading are gone because I'm trading a completely different method. I schedule my trades. I know the day before the trade what my setups are going to be, and I can decide at the moment of the report or the trade whether I even want to take this trade. It might depend on the current market conditions or what's going on in the world news. There's all sorts of reasons why you might not take every trade that we talk about. And that's also a very important element that made another monstrous difference in my trading. When you're a discretionary trader, more often than not, you overtrade. There were a couple of elements that I learned over the years that I found that everybody does, and they do it incorrectly, and it hurts them from becoming a profitable trader. One of the first things that we do, and we're all guilty of this, so I'm not blaming anybody. It's just human nature that we do these things. One of the things we do is we try to put as little money as possible in our trading account. Rather than, I think the opposite should be true, put as much money as you can in your trading account. Think about the maximum, not the minimum. I think it's a better way to think. And then trade as little as you possibly can, because the market doesn't want to give you money easily. The market wants to make you work to get the money. So the more you trade, the more opportunities you give the market to take money from your account. So that's the greatest, a couple of the greatest aspects of the way that we trade. We're not in the market for very long, and we try to prevent the market from taking our money by our trading carelessly or trading too often. So undertrade rather than overtrade. So we trade events. So what actually triggers these events? You've got high impact economic reports, CPI report, a storage report on oil or gas, GDP reports, unemployment reports. Excuse me, those are high impact economic reports. Another category might be big company earning reports. We have a setup for trading Apple and Netflix, for instance. And a third category might even be something like tweets or real-time news events. There are literally dozens and dozens, hundreds of categories that might trigger an event. And what we have done is we pick the events, the best events that we could find, and I'll show you how we pick them. In other words, so that you don't have to spend your whole life going through all the events that are available. We've done it in advance, and we have reports. When there's an event that's worth trading, we send out a daily report about that event. So how do we find those events? And the best way is there are very good calendars available to all of us, and they're free. Forex Factory is one of our favorites. So if you just go to forexfactory.com, it brings up a calendar of events. They're color coded, the best events or the events that supposedly will have the most impact are in red. Orange is the middle events, and then yellow are less impactful. You can't go by Forex Factory all the time, but it's a very good starting point. And then they name the event. They have a file folder. You can click and get previous dates of the event. So these are the methods that we use to find these events. And we use multiple calendars. We use Forex Factory. We use investing.com. And one of the reasons we like investing.com is because they have a nice feature. While we are trading, we can put investing.com on our screen. And most of the time, and keep in mind, this is free. It's a free service. You don't pay for it. Most of the time, they will report the event and the result of the event. So for instance, if you're trading, the Royal Bank of Australia releases a consumer sentiment report, or in this case, it's New Zealand. When that consumer sentiment report comes out, it will possibly move the New Zealand dollar. And they may show the result on the website investing.com in real time, and that helps us when we're in a trade. So it's a very, very nice free website that we use. And of course, also it has all the events listed that we're interested in finding if we want to trade them. So that's another great calendar that we use. We also use Econoday, FX Street, and then as of late also, we're using a service called Financial Juice. Their service is not free, but I love the company. They have an excellent squawk box. In other words, I can hear in my ear what the news result is going to be, and I don't have to look away or look for a number while I'm in the middle of the trade. And their service, they have a free service with slightly delayed data, and they have a paid service that is not overly expensive that you can subscribe to, and their squawk box is absolutely great. And that's Financial Juice. So Forex Factory uses color coding, and then you figure out, so you've got all these events, so how do you pick a trade? The key for me finding trades is we use the NinjaTrader platform, and that platform allows me to back test. In other words, I can pick, say, the US jobs report, which we all know is a very impactful news event. I can pick that report, and then I can load previous months of data on the index that we're trading. For instance, I know that we trade gold on that report, so I could load gold, the futures, into NinjaTrader for last month, for instance, and I can back test the trade. So I can practice trades, test reports before I ever use real money on them, and decide if they're good enough and potentially profitable enough to trade and to create a report for. So that's the key. and why do these reports work? So one of the reports I was going to spend time on today is the WASD report. And the reason I'm spending time on the WASD is because next week there's a version of the WASD report. It's called the quarterly grain report. And it's very, very similar to the WASD. It's a grain report, and it'll affect corn, soybeans, which are the two instruments that we trade. And what happens is the reason these reports work, those events that you saw on screen, what happens is the event is scheduled at a specific time of day in the month. So we set up a trade. We have a trade room a half hour before the report, and we set up a trade for that report. And what happens is if the government is releasing a grain report, for instance, that has to do with imports, exports, plantings, farmers buying and selling, all sorts of elements related to corn and the profits involved with corn, it's probably going to make corn go up or down when that report is released. And that's exactly what happens in the WASD report and or the quarterly grain report. So let me go a little bit further. So what we're going to do, and what I'll show you I do, we bracket the trade, and I'll show you exactly what I mean. And you'll see that the trade takes place in a matter of less than a minute usually. Let me show you a sample real live WASD report. I believe this was last month's. Let me make sure I have it. If I don't have it, I've got many of them, so I'll show you a current one. Let me show you the screen. This was the screen from last month's WASD report. You can see that what happened is the price of corn, which is what I was trading, went down quite a bit, and it allowed me to get a profit of, it was $440. There were two trades on this report. And give me just one more second, because I don't see the most current report, but I know I have it. And if I can't find it, I'll show you another one, because the WASD report has been behaving so powerfully exciting these days. Here's last month's. So I'm going to fast forward to like a minute before the report. On the screen, you're seeing corn, and on the right, you're seeing soybeans, because we have two possible trade setups on this particular report. I normally like to trade corn because corn has higher liquidity. It's got less whipping around than soybeans, and I'll show you what happens. So what happens and why this report works. Right before the report, the news, we put our brackets, our orders on the chart. These little X's are my orders. The news comes out, and this is the corn market represented by this candle. The news comes out, and it's going to make corn move in a certain direction based on the report. So watch what happens. The report comes out, corn jerks around a tiny bit. You almost can't see it with the naked eye. And then it shoots down. It hits both of my targets, and it gives me a profit of roughly $425, which I can see here, not roughly, exactly. It was less than 12 seconds. The trade was over in 10 seconds. That's the WASD report. Next week, we're going to be seeing the quarterly grain report. The quarterly grain report is very, very similar to the WASD report. The last quarterly grain report was the best, historically, was the best report I think that we ever saw in the history of the company. Let me show you what happened in that trade. It was amazingly huge in terms of the move. So this was my orders. This was live, real money. It's not like we're doing this in sim. I was up $150 on a different trade before the report came out, and the report was released, and grains exploded off my screen and gave me a profit of over $1,400. It was actually, the exact profit was $1,437, and it was less than 6 seconds. That was last quarter's quarterly grain report, like a big brother to the WASDE report, which is a monthly report. And it literally $1,400 in less than 6 seconds. Members in our room, one of our members made $575 on the WASDE report the couple of weeks before that. And then one of our members made $580 on the quarterly grain report. And one of our members had an awesome trade. I hope I have it here. Give me 1 second. If I don't have it, you'll have to believe me, because I think you know I don't make things up. He made more than we did. This was my trade for the $1,437. Look at the explosion that it made. Very, very large move. And that's one of the reasons I enjoy trading this way. Now, obviously, every trade isn't going to be perfect. There are going to be losing trades. You're going to have trades that they fill you poorly, or they go to the top of the candle and you don't get filled. This was another member who traded a recent jobs report and made $375 on it. But the reason that these reports work, okay, the reason the reports work is because the market is volatile when the news is released. We track when the news is going to be released, and we have a trade set up how to trade it. And Sally asks, what's the stop? So if I'm investing, if I'm trading 4 contracts, I might be risking $300 or $400 or up to $500 on a trade that I might be able to make $1,000 on, Sally. Or I like to take, I try not to risk more than I'm going to trade than I'm going to make in profits. But there are reports that make profits so often that those reports, I don't even look at the risk reward on those, because if I have a report that is so profitable over time, in other words, its history is 75, 80% profitable, I don't really care what the risk to reward is on it, because it's not going to matter if it's going to win 8 out of 10 times or 7 out of 10 times. I'm going to make money on that report. And yes, we do sometimes trade NASDAQ futures. We trade gold. We trade currency futures. But we do find that the indexes are not as good as the commodities, because the commodities very often just move better on news reports. However, the NQ is a good index to trade. We'll trade the NQ on the FOMC statement. We trade the NQ on CPI. The NQ is very volatile these days, and it is quite tradable. So the point is, we go through these events, we pick the best ones, and then we want to deliver these events to you on a silver platter. That's the whole key. We've spent the past 7 years researching and backtesting these appointment-based trades. We've narrowed this field down. Like you saw, there's hundreds of events, and we narrowed them down to just the top 1 to 3 trades of the day, okay, that we focused on. And now we're doing something even narrower. We're narrowing this field down to the 1 to 3 best trades of the week. And we're now under trading, because I'll show you why in a minute, but under trading is so much better than over trading. So we're trading 2 to 5 times a week now, and we call it family money trades. It's virtually a small tweak that we made to our regular system, okay? And the concept is, we're not taking a trade unless we would trade it if we were trading our own family's money. So we call it family money trades. Now, someone's asking the question, Heinz is asking if you have to use a VPS. I don't use a VPS. So a VPS depends on whether or not you can get good enough, fast enough fills based on where you're located in the world. Most people in the United States do not require a VPS. And then some people do use a VPS, and some people overseas. I've seen people overseas not using VPS, Heinz, and I've seen people using them. So it really depends on the quality of the fills that you can get. And you can know by comparing your fills in the trade room to other people in the trade room. But a VPS is helpful. It's a private network that you can install software on when you're trading, and it will get you better fills because theoretically that VPS is located close to the servers in Chicago. That's how a VPS essentially operates. But the internet's so fast these days, and fills are so much better than they ever used to be. So we did used to use a VPS years ago. Now we don't. So these trade triggers that we're talking about, the ones that we send out to you, have the highest probability of moving the markets and the highest probability of resulting in a successful trade. The ones that we're concentrating on in our trade room are the family money trades. And then we also trade a lot of the bubbling under reports, the reports that they're not quite proven themselves yet, and reports that do still have a potential to be profitable. We still trade those, but we use a separate account. We keep our family money trades separate because we have a lot of people that want to trade only the best of the best. So that's a separate account for us. We have a family money account and a regular test trading account. So we call these reports that we send out to everybody daily market movers, DMMs. Every day, at least 4 days a week, we send out a one-page report on each of the top 1 to 3 moving reports for the next day. So you know the day before what event you might want to trade if it fits your style. You get a full day to prepare. Every daily market mover includes the trade trigger, the time of day for the trigger. Trigger is a fancy way of saying what the event is, what market will be trading, whether it's the gold futures or the NQ. We show historical performance of the trade on the report. Most of the trades are monthly, so they repeat over and over. We show a risk level of the trade. We have a setup, a recommended setup that we like to recommend as a starting point. We like if people would choose their own targets and their own, don't do everything exactly like your trade mentor does. I'm a believer that, yes, you can learn from me by watching me, but ultimately you're going to do the best if you put the time in to learn how to do it yourself. So you know when a target can be a little bigger. Maybe you want a bigger target than what I'm using. So I try to tell people, when you're first starting out and practicing in sim, you can do things the way I do, then get good at what you're doing, and then start to figure out how to do things on your own. But our daily report has the setup that I'm going to use. It has a personal trade journal that shows how the trades have been going for the past 6 trades. A narrative, it discusses information about the trade. And here's an example of a current market report. This was the recent WASD report. And you can see it's got the WASD up top, the name of the report that we're trading, the market we traded, the risk, history of the way it moved. The yellow line was the setup I was going to use. And that setup is always subject to change based on current market conditions. But more often than not, that setup is going to work really well for the report. It has all sorts of information on it, targets, the stop, the risk that we use, cancellation rule. And then the last thing over here, this little table, is the journal of how this report worked over the past 6 months using that particular setup. You can see the WASD is a great report. This is a real report that we send to people. The WASD has won 5 out of the last 6. That's pretty good. That is a family money trade. And that is one of my favorite reports, the WASD. So this is a sample of the DMM, and then we have a little bit of information, text that explains about the report. This particular report sometimes has a quick reversal, so we put that info on there as well. So you can see we put a lot of time and energy into these reports. And the reason we do that, so you don't have to, it's a why reinvent the wheel. We know most of the events that are going to move the markets. Now, we don't know every single one. And that's why I love interacting with other traders. People teach me other things also, what reports are going to be good that maybe we're not looking at. And then we have a monthly subscription to these reports, and it's only $49 a month. It's very reasonable, and obviously it's, to us, it's worth every penny. But because you're here today, we always have a special when we do a webinar. We have a 90-day offer on the daily market movers for just a fraction of our regular price. So here's the deal. If you take action today, this offer is going to be over tomorrow night at midnight. And if you take action for just $27, you can get the reports for 3 months. We'll also invite you into our trade room for free. It's a $147 value. We'll give you a week in the trade room for free, 3 months of the DMMs for just $27. It's not a subscription. It's not going to repeat and charge your credit card again and again and again. It's a one-time charge. We believe that you'll like the reports so much that you will resubscribe when your 90 days are up. And it is not for grains. It's all the reports that we trade, Sally. So you might have the CPI report, which is the NQ and gold. You have the US jobs report, which is bonds and gold. You could trade the ES. There's all sorts of different things that you can trade. And we're just charging $27 for these reports. You go to www.getdmmnow.com to sign up. And again, if you sign up today or tomorrow, but I would do it today because tomorrow everyone's going to be busy doing something else already. We'll also offer you a free week in the trade room, and you can learn and watch the way that our method works. It's exciting, it's fun, and it really is a great way to trade. And you don't have to spend hours and hours sitting in front of your computer waiting for setups. It's a whole different way to trade. And in fact, if you love discretionary trading, we're a fantastic second service to add to any other trade room that you might be involved with. We never tell people, oh, just trade with us. I'm a believer. Well, I know for a fact, and you all can verify this, every time I've ever helped one of our members and gone onto their computer, with a remote call to help set up software or figure out a problem, I always see our friends like Rightline. I see their software on your computers. So I know that all of you try different services and stick with the ones you like. And there's more than one that people like. So what I'm saying is, for $27, you can try us out. And if you like us, it's no problem adding us as a second, or if we're not your first choice, second or third choice is awesome, because we don't take up your whole day and your whole week for trading. So you can stay with another favorite service that you like. So that's what another thing I love about the way we do things. We don't take all your time. So it's, as I said, it's not a subscription. It's a one-time investment. It doesn't auto-renew. And I said before that we hope you'll love the daily market movers, that you'll keep subscribing, which most of our members do. But if you don't, we won't charge you and we'll part friends. And that's the way it goes. So getdmmnow.com, www.getdmmnow.com. And there's something more that I wanted to discuss while we have a few minutes left. So now I said purchase by tonight at midnight for a free week in the trade room, but I'm going to let this go until tomorrow at midnight. Okay, we'll let it go till tomorrow at midnight, and I'll still offer you the free week in the trade room. If you need questions answered that for whatever reason didn't get answered today, you can reach me or us at help@10minutetrades.com. We're also going to have a very exciting event for free on Thursday that we'd like to invite you to, and it's going to cover what I'm going to talk about now. So we have these reports, we send them out. There's 2 to 3 a day, almost every day. And what we've done is we've made a tweak to our system because we realized also that over the years, the way to make the best profits is to pick the absolute best of the best. So I want to show you my brokerage statement starting in April. In the month of April, we started trading. We changed what we called our system. We're calling it family money trades, FMTs. Our initial balance on our account on April 1st was $13,228.21. So $13,228. And here's my brokerage statement. Now, of course, I'm sure there's somebody out there who says, oh, you probably photoshopped that, but I didn't. I wouldn't be here to Photoshop something. And I think most of you even recognize this. If you're using Dorman as your clearing broker, you recognize this statement. It's the right font and everything. And I don't know what font they use. That's my $13,000 April 1st. And here's my brokerage statement as of July 15th. I just want to show you a projection, a movement upwards that we were moving. So we were 13,000. July, we were 20,378. And my balance taken from my NinjaTrader Live platform on Friday was 21,491.89, which was a profit swing of $8,000. Now, I know a lot of people are saying, oh, I can't live on $8,000. And of course, no one can live just on $8,000. The point is, number one, we've been profitable on a consistent basis from day one that we started trading family money trades. The key is we've been trading consistently for a period of time. Sometimes with any trading system, and it's what makes trading complicated. And it also can sometimes make it hard for people to believe you. Sometimes a person might start trading with you during the month where trading is difficult. The key to any trading system, whether it's mine or Adam from Buy Side or Right Line, you don't want to ever decide if something works or doesn't work based on 2, 3, 4 weeks of trading. You've got to give a system 2 to 3 months, maybe 4 months, I would say, to see what's going on in that system. Does it have consistency? And it's very important not to give up after a week, not to give up after 2 or 3 bad trades. The thing that we do, it's human nature to get scared if something doesn't work. But I wanted to show you the profits we've had from April. This is not trading 10 contracts, 12 contracts. We started trading in a $13,000 account. So, and we're trading in a way that teaches. I'm not always trading in a way that is geared towards making the most possible money I could make. That has never been the purpose of why we do things. Our first goal has always been teaching. April 1st to now, Hans, it's April 1st to yesterday. That's when our balance was taken. We went from, like I said, 13,000 to over 21,000. And that's the proof. This is a picture of my NinjaTrader control panel with my real account number, and it shows that $21,000 balance. And it's taken right off of the platform itself, which shows you the real money. Because people never believe when you tell them. So if you sign up before midnight, this fast action bonus, it'll get you a free week in our trade room next week. It gets you all the reports, www.getdmmnow.com, for just $27. And we'll invite you to our family money trade event on Thursday. And keep in mind that if you get our events, if you get our reports, all of our family money trades are part of the reports. So for $27, you could find out about the method we use to be profitable traders. So I think this is an awesome deal. I wanted to show you a couple of quick trades. And then because we never hosted an event before, I might stop a minute earlier than I should to make sure that Adam gets into the room fine. and there's no problems because there's a lot of you here, and I want to thank you all so much for coming and spending your time with us. Now, I want to answer a couple of questions that people asked. Which contract size on the account size is best to get optimal fills? So, Heinz, it's a question that you can't really answer, which contract size. It depends what you're trading, what your broker's margin is. It's going to vary, but the profit that we made is trading. The maximum I think I ever traded was 5 contracts on gold or on grains. We were never trading 10 contracts, and we had a $13,000 account to start. It built to over 20. So that was the bonus of trading what we call family money trades. Now I want to show you next week that quarterly grains trade in real time because it's such an amazing trade. But let me just show you a couple other quick things. So I always love showing member screenshots. So one of our members who's been a member for a long time, his name is Jeremiah, and he had a U.S. jobs report profit of $703 trading bond futures. And you could see why he made money. He got into the trade somewhere around here, okay, where my cursor is moving, and it profited as it moved down. So you could understand how he made the money. He got in short and the market continued down while he was in the market, and he made $700, and that's a 1-minute candle. So it was less than a minute. It was a pretty quick trade. Then we had that quarterly grains report, which is so exciting. In my opinion, it was so much fun to have the market explode, and it actually gave us more money than it should have because it moved so fast. I probably should have made about $1,000 on that trade, and it gave us something called positive slippage. It hit my targets a little bit later than it would have hit them had the market been moving more slowly. And that happens just like sometimes you might get a negative trade that takes a little bit extra money. You might have a trade that gives you extra money. It works both ways. And so people say, you can't trade news, there's too much slippage. But it's not true. Sometimes there's positive slippage, sometimes there's negative slippage. So the truth is, slippage goes both ways. And yes, we'll definitely record the event for Thursday. We record pretty much everything. We record a lot of our trade rooms also. That's why I wanted to show you one more time the quarterly grain report, just the speed and the fun with which it moved. That was a $14 trade. It was over in 4 seconds. That trade is taking place next week. That doesn't mean the trade's going to do that next week, but here's the January version of the same report. And I don't remember if this was a winner or a loser. I just pulled it out of my videos for this webinar. It's probably a winner. I don't think I might have noted it if it was a loser, but let's look. My brackets, there's the brackets. The report comes out January. It shoots up, reverses, but you stay in the report, and then it explodes to the upside. Really powerfully fast move. I made 387 on that report in about 9 seconds. And that was trickier to trade. So if you look at, not every trade is simple and easy. This particular trade, if you watch the movement, first thing that happens is our orders get placed on the chart, and then the price explodes. But it struggles for a second. It backs up, and then it explodes. Boom. And it takes my targets, and it gives me a nice profit. So that was 2 quarters ago, the quarterly grain report. So I want to thank everybody so much. So Family Money Trades is a subset of our reports in a sense. It's included with the www.getdmmnow.com. So you can learn about the best of the best. If you like more trading, you can trade the bubbling under reports. You can study the reports that are starting to get better and better as well. And it's a really good deal. Even if you're a discretionary trader, getting these reports and knowing what events are taking place in the market when you might be in a discretionary trade could very possibly protect you from having a difficult trade. So it's not a bad idea to look at important events and know when they're coming. But it's a funny thing. People want to trade the news. They're afraid to trade the news. But I'm saying that we've been trading the news for years and years and years. And if you control your risk with good setups, you can trade the news profitably. Okay. So www.getdmmnow.com, just $27 and a free week in the trade room. So what I'm going to do, folks, is I'm going to introduce, okay, one more last question. How many of your trades this year have gained by going long or short? Graham, I don't know the answer to that. I don't analyze them, by up or down. Because why does it matter if you think about it? Long, short, sideways, all we really care about, was it profitable, is more important. And we look at the individual report for profits. So in other words, I look at the jobs report as a separate entity from the ADP report, from the grain report. The way to figure out which are the best reports is to look at them individually. But I don't really think it matters what direction they go. So to answer your question, I'm not going to analyze them for the direction they moved. I don't care. I only care if it worked, if it moved up or down enough to give me a profit. That's the key. Okay. So does that make sense? So now what I'm going to do, folks, is we're hosting this. So I'm going to hand this off, or I'm going to try, to Adam Chase and Dave Gear from Buy-Side Global. Two new friends of ours. As I said before, they're new partners of ours that we've started working with them. They have really, really nice software. And I'm really happy to introduce them. Give me a second because I'm going to put their mics on. Okay, let's see. Dave, your mic is working. And Adam, you might have your mic muted because I'm not able to unmute you. Yeah, there we go. Okay, good. I can hear you both. I'll try and hand over the screens. So I've got Adam Chase and Dave Gear as their head trader from Buy-Side Global. They were founded in 2014. They have technical indicators and automated trading software, and their software is currently being used by thousands of traders all over the world today. I'm really excited to introduce them. Let's see if I can give you, Adam, I'm going to make you the presenter, and you should be able to show your screens in a second.
I hope. Okay, what do you guys see? Do you guys see the name Buy-Side Global?
I see your screen, so if everybody else does, they'll tell us.
Let me see.
And it looks good to me. And
You don't see
thankfully,
the
You're
You
good.
don't see all my notes, do you? All right.
No, we don't see your notes. You're good to go, Adam. I'm gonna hand it to you and say thanks for being here, and then when you're done, I'll come back.
Okay,
Thank you,
I
Will.
also just want to make sure that I can see questions. Can you guys type in here what it is that you prefer to trade, what instrument you guys prefer to trade? Just put in the CL or the NQ. And Dave, do you see that anywhere? I just want to make sure I see that.
yeah, I can see the chat, and then also if you put in how long you've been trading, that'd be good to hear as well. If you're brand new or a year or so, months.
For some reason, I
can't see the chat, but I can see your screen.
Yeah, I can't see the chats. Lee, do you know why we can't see the chats? Or
Yeah, I'm thinking you can't see the chat because in the GoToWebinar control panel, there is a little box that it should say chat, or it should say questions. The one you want to see is questions.
Oh, there we go.
And if you click on that, it'll break it out so you can see it.
Okay. If anyone, can someone ask a question? I just want to make sure I can answer your question, so I know that's important. So, because I'm not seeing it, but yeah, I'm doing something wrong. I guess we won't dwell on this. I definitely want to answer people's questions because I know it's very important. Lee, if you just let me know what I might be doing wrong. In the interim,
If you want,
yes.
I'll stick around and I can relay the questions to you. Happily do it.
I don't want you to have to do that. Are you seeing people ask questions or?
I'm seeing them type in. So on that GoToWebinar control panel, you should see something that says, it should say questions, and you can click on the little box next to it, and it should break it out into a little mini window for you.
No, I see it. Okay, whatever reason, I won't do, we'll work past this. Okay, well, listen, first of all, Lee, thanks for having us. We love Lee's program. Appointment-based trading, I think, is an awesome, what they practice is fantastic. I actually want to go into the trade room. I just love the whole idea. I love working with Lee. So again, honestly, thank you, Lee, for having us. And you guys, it's a Saturday. Really appreciate you guys coming out to listen to us. I know you have a lot better things you'd rather be doing than listening to us and taking time away from family. So I'm going to make it brief. You guys know me. My name is Adam Chase, Managing Director here at Buyside Global. We also have Dave Gear. He's our lead trader. He's nice to have here to answer questions and for entertainment. We love his jokes. Let's go quickly into the disclaimer. Again, you guys know that trading futures and everything else has risk. Please trade in sim. Be cautious with this. This is you can definitely lose a lot of money, if not all of your investment, if not traded properly. Please reference CFTC Rule 4.41. Take a look at this. Okay, thank you. And real quick, the agenda, again, it won't be very long. And we have a couple really exciting announcements that the current members, because there's a lot of people here that are existing Buyside Global members, we have some exciting news for you guys. And I'll tell you that in a little bit. For those who don't know us, I'm going to briefly tell you the intro overview of our software. We're going to do some charts and trading examples, Q&A, and then obviously we always do the special discount offer to say thank you. So real quick, who's Buyside Global? So Buyside Global, we're a software company, and we are a preferred partner with NinjaTrader. We've been a partner with NinjaTrader for 2014. Since 2014, we were started by a former Wall Street investor. You guys know Peter Balla. We are compatible with NT7 and NT8. Our software was developed and designed by a team of programmers who have and currently work and developed indicators for some of the world's largest investment banks on Wall Street. We wanted the best team of programmers with only the most extensive background to build our software, and that's what we got. And that'll carry on to an announcement I'm telling you later, which everyone will be really happy with. Our software is used around the world by thousands of traders. So currently we have 8 indicators, okay? And we have 1 universal trading bot, technically 2, because you can switch between the 2.0 and the original, but 2 universal trading bots really. So what does our software work with? So first of all, you need to make sure that you're on the NinjaTrader platform. Currently, we are only compatible with the NinjaTrader platform. So if you are not on NinjaTrader, please join with NinjaTrader, right? We work on daily charts, weekly charts, minute, volume, range, Renko, tick charts, compatible with all those. You can trade stocks, futures, ETF, bonds, Forex. Basically, what I like to tell you guys is that if it's compatible with NinjaTrader, Buyside Global, it will work with Buyside Global. Okay, so with that, we literally talk to hundreds of traders every single month. Hundreds of traders. Why do you care? Why is that important to you? Why am I telling you this? Because we hear the common theme of what traders struggle with and what they're looking for and where is the biggest assistance that they need. And the most common struggles that we see traders struggling with is not knowing when to enter trades, obviously, pulling out of the winning trades too soon, and staying in losing trades too long. And then obviously revenge trading. And the number one problem that traders struggle with is obviously being consistent. You're going to have 3 good days, 2 bad days, or 4 bad days, 1 good day. We've all been through it. We totally completely understand. And it's normal. So totally normal. If there's any one trader out there who has 5 consecutive winning days, 365 days a year, send them my way, because I would like to talk to them, right?
Yeah. I was going to mention, Adam, real quick, that consistency is the key to profitability. Anybody can get in and make a lucky guess and have the market go your way, but you're not going to be able to make a living at it. And I think that's what most folks here are looking for, some extra income or to replace income. So yeah, consistency is key.
And here's what we'll do. I just figured this out. If I still at the end can't see the questions, we'll just kind of ring Lee, and he'll be able to see the questions, and he'll filter through the questions. So I will definitely answer your questions, because I know that's really important. So anyways, you're going to enter and exit your trades. That's what we can do for you. Our software clearly and accurately tells you when to enter and exit a trade. Clearly and accurately tells you when to exit a trade with clear targets and stops printed. So what is our software is based around order flow, right? So what is order flow? Order flow is the mechanism that moves price up and down. It's the balance or imbalance of buyers and sellers, bids and asks. We'll get into that in more detail. But really, in order to make an informed, to trade successfully and to be able to know when is the right time to get in and out of a trade, you need to know what is happening right now. Institutional trading behavior obviously leads to price movement. Our software is based upon institutional money and trades, and that gives you the confirmation of market direction. We're going to show you all this visually, but our software is really based around we have a circle, triangle, hollow arrow. Blue is go long, short, red, yellow is choppy. So, and you're going to see all this. Sometimes I like these slides, sometimes I don't, because it's all redundant. I'm going to show you the visually, but again, the blue is the uptrend. There are more buyers and sellers. Gold, choppy, indecision, price consolidation. Red, downtrend, more sellers and buyers. So let's look at the charts and the nitty gritty. So here's what I really want to actually show you is, and what I want to tell you is, we oftentimes come out with new indicators, and oftentimes we have some updates, but we haven't had a major overhaul and a major update of everything, all the buy-side global products, in quite a while. And what I want to tell you, and I talk to members every day, all day. A lot of them have been hearing this, but it is this week. I'm going to say by Friday, for the first time in several years, every single one of our indicators has been reprogrammed and retooled, including our Autotrader strategy, and is all coming out and will be the 2.0 version. So what does that mean? If you are an existing member and you have a lifetime license on that product, I want to be clear, if you have a lifetime license on, for example, the blue chip, you're going to get the brand new blue chip for the members at no charge. If you're not a member, sign up and you'll get the newest blue chip. But every single indicator is coming out brand new, reprogrammed, bugs fixed, enhancements made. It's going to be awesome. So again, now if you don't own that indicator, you're obviously not going to get that upgrade. But if you do own the indicator, if you bought the Autotrader, you're going to get that free update. If you bought the blue chip, you're going to get that free update, order flow, etc. So exciting stuff, right? Right. It's awesome. All right. So let's go through these charts. So for those of you who aren't familiar with our products, the first one is the blue chip. So this is our most popular product. And we're just going to go through some quick examples here so you see what it looks like and how it works. These are pulled screenshots off of live charts, live data, and we just put in some copy here for you. The other thing, so with the blue chip, real quick, this is our most popular product and our anchor product. So the blue dot, the blue dot enters and you want to go long on blue and you want to short on red. I'm getting tripped up on my words here for a second, sorry. And you have a triangle that comes in simultaneously with the blue dot, okay? I wonder if I want to see if I can grab a pen here. I'm going to try this.
While you're grabbing that, let me just mention real quick here while you get that pen going. This is my bread and butter, and what we trade the most off of here at Bicep Global is this blue chip. And I just want to point out they all show up at the exact same time. So you get a triangle, you get the dot, and you get the target. I'll let you finish talking about what those each individual mean, but I just want to put in my 2 cents worth that this is a very reliable, robust system in my opinion.
I think most people who use the blue chip know that because we get tons of positive feedback on this. Blue chip comes in simultaneously with the triangle. At the apex of the triangle is where it comes in. The base of the triangle is where you put your stop. Same with you guys can see this red dot, I'm assuming. Dave, can you see this?
Yep, we're seeing it.
Same with short. So here's a red signal. It'll come in at the apex. This is where you put your stop. Now, a lot of times we get comments, that's too big of a gap for me. No problem. That's a suggestion. That's just to give you an idea of where you would typically place it. If you want to put it here, that's fine. These are the targets. These 3 targets right here. You can stay in longer. Obviously, on this blue chip, it came in here and exceeded all those targets. That would be 20 points. In combination with this is the trailing stop. Okay, we'll go into more detail on that. Okay, I don't know why. Sorry.
Are you winning the lotto or something?
I don't know why I can't. Let's see.
That's fine.
There we go. Okay. I think it was that pointer. Oh no, can I not use that pointer? We'll try it again.
Okay, oh, there it is. It's back there. It's back to red.
Okay. So another example, the blue chip here. The blue chip comes in here, parallel with the apex of the triangle, shoots up. Another blue chip comes in here, shoots up, hits all these targets. Same here. Again, you put your stop there. This is just, I have to do it this way. Okay. Here's the blue chip again. So we have, it's on the ES here with 4 points. This is a short, it's shorted here, came in here, again, parallel with the apex of the triangle, comes down, hits all 3 of these targets and continues down, gives you another signal. Now, oftentimes we'll get people saying, you know, show us false signals, show us when it's a bad signal. And absolutely, that does happen. Bad signals happen. I'm not here trying to tell you that bad signals don't happen. It does happen at times. Let's go to the next one. I don't know why this is doing that, but we're just going to ignore it. Here we go again, 190 ticks, 950. This is taken right off of live charts, okay? Came in right here on the YM 1221 contract. And now let's talk about the trailing stop. So the most powerful combo is the blue chip with the trailing stop. That's what I use. That's what Dave uses. That's really what most of our traders use. And we just use this in tandem with the blue chip and have had great success. So obviously the green indicates the presence of a bullish trend. Red indicates the presence of a bearish trend, and yellow indicates market sideways or choppy. You have any comments on this one, Dave?
No, just other than that is my jammy jam. I mean, that's I use that trailing stop for a filter. In other words, I won't take it. You know, even if it pops up, if it's below, if a blue chip fires up, but I'm below the trail stop, I won't take the trade. It just acts as a filter. And you can even use the trail stop by itself sometimes. Just when the price goes down through the trail stop, just get in short. So I really like that, and big fan, obviously.
Perfect. Okay, so again, here's another example of the trailing stop, 22 points. That would have been $1,100 on the RTY. And here it is without the blue chip. But you see, you'll notice that look for long on these entry points for the green. Price goes above the trail stop, look for a profit on a runner when shorting here. So really fantastic indicator there. And then here's another one just on the ES. So the point of showing you these different charts with the same indicators, just a lot of times people ask us, I want to see it on the ES, I want to see it on the NQ, I want to see it on the RTY. So that's the point. So you see that here it is in RTY, here it is on the MES, here it is on the ES, etc. Here it is now on the CL. So there's the trailing stop here on the CL. Okay. Next one is our bear bulls. This has been extremely popular and our members love this indicator and it's very customizable. Okay, so we've customized it on this chart. Dave, can you just see if I circle with this pointer here, can you see that?
Yep, we're seeing it. Sure. It's black arrow pointer is moving. It's fine.
So what we do is we have warning markers and we have these hollow markers. When the hollow markers here correspond with the green arrows here, that's an indication to go long. Same with the red. When the red hollow arrows correspond with the red triangles down here, indication to go short. And then you have an order flow wave box here. So you have two different visuals here that give you an indication of when to get in and when to get out. This is on the GC. And this would have been, looks like 3 points. This is just a fantastic indicator. By the way, I do want to mention that we have audible alerts on all these indicators. So you can set it up to whatever you want, but we have audible alerts on all these indicators. You can mute it, you can have it on, you can have it with a doorbell, a piano, whatever you want. Here's the bear bulls again. So you got a short signal here, right there, comes in. On the ES, it's on the 621, 10 points, would have been $500. Here it is in gold. This was on the 1221 contract, 15 points, 1,500. Again, you'll see the triangle and the arrows line up. It gives you an indication of long and short with the red arrows.
I'm going to mention too, this is really good for the bear bulls indicator. Like talked to a lot of folks who do scalping, or not scalping, but for swing trading, a little bit more long-term, day or so. They really like this trend indicator here.
Yeah.
Bear bulls.
Perfect. 42 points here. This is on the ES, $2,100. This is a screenshot that was taken right off of a live chart. So this is a really good move right here. Our next one is a VWAP. You can absolutely get the VWAP for free through NinjaTrader if you like. Ours is a little bit more advanced. We've customized it to work with our indicators. But sometimes if this is something you don't want to purchase through us, that's completely fine. Just want to let you know a few things that we've done to make ours different than the free version on NinjaTrader. So for example, you'll notice here the VWAP, which is obviously right here in the center. This shaded area can go bigger or smaller. It's completely customizable. And again, we've made this specifically to work well with our buy-side global indicators. But obviously, you know that VWAP is volume weighted average price. You always want to buy above and below VWAP. Short, you want to sell above VWAP, buy below VWAP. But here it is. And these bands, you can change colors and customize this however you like. Are you using the VWAP much, Dave?
Yeah, I was just going to say, I honestly, I don't take a trade without looking at it, just kind of see where I am. Again, it's a little filter for taking a trade. And the reason I look at it is because I know everyone else is looking at it as well. And so it's not that it's got magic powers. It's just that I know that everybody else is making trading decisions based on where the price is respect to the VWAP price, and so it helps me to filter that. I'm very careful taking a long above VWAP, and I'm very careful taking a short below the VWAP. I've got to really be talked into it. Other than that, it's a great indicator for that. Just let you know kind of where you're at in the big picture of things.
Awesome.
I always say if you're not paying attention to the VWAP, you're not paying attention.
So a lot of guys out there want to trade off of order flow indicators, and we have these. This is very specific for order flow traders. So our order flow helps the traders identify buying and selling pressure through the trade activity. So this indicator uses order flow and volumetric bars, which you see here, to provide you a tick-by-tick representation of the buying and selling pressure within each bar of the market. So it utilizes the footprint style visualization to show order flow in balance. It can perform market delta analysis, identify volume clusters, absorption, exhaustion, etc. So to go into a little bit more detail here. So the red numbers on the right are the ask, and the green numbers at the top of the candle are the positive and negative delta. The green price is going up, red price is going down. The blue numbers in the candles are the ones that show the imbalances. The red box in each candle is the high volume node. We have the on bear and off bear. So obviously you want to go long on off bull here, and you'd short on off bear here. So that's your indication. And then you also, obviously all this right here, the ask bid, max delta, min delta, you can remove all that if you want. You can keep a couple of these if you like. It's completely customizable. So sometimes if there's too much noise on here, you can add or subtract from it. So
yeah, I was just going to add to that. I'm just a simple old trader. I just need to know when to get in and when to get out. And although that, obviously order flow does move the market, everyone understands that, and there's a lot of talk out there about order flow. But the nice thing is you can customize this, and I just need to look at when the triangles pop up, I just need to follow that direction. And so it's as simple as that. So don't, if you're getting overwhelmed by that information, please understand that Buy-Side Global simplified it for you. It's just literally just a triangle and a color if you want to make it that simple.
So here it is without the markups. So you get an idea of exactly what it looks like. Okay. Here it is again. So again, you'd go long on off bull. And then obviously you go short on off bear. And then you have all this information in there, which is just tons of data. To me, it's a little dizzying. It's not my #1 favorite, but tons of people love trading our order flow indicator. Very popular. And here it is again. So here's an example of a short. Just drops off a cliff right here. All right, our next one, again, another example of the order flow indicator. And right here, it shows you the trap buyer warning and trap sellers. Okay. Next is order flow zones. Just another amazing way to know when to enter and exit. So this reveals the market direction. It's the key support and resistance. The green triangles are the buy signals, red triangles are the sell signals. You buy on the green, sell on the red. Uptrend are the blue candles, obviously. Downtrend are the red, sideways or choppy, yellow, obviously. The order flow identifies the trend by color. It's designed to help you stay in the big moves and yet minimize your risk. So this is another favorite of mine. I love this. Here's another. Let's see, this one is 450, 45 ticks, $450 in the CL. And back here at NQES, showing you a couple different ones. CL, ES on order flow, here's a clean chart. So you'd enter here, price keeps going up, and then you have choppy, it gets chopped out here, and then you have short going here, downtrend. All right, here is the order flow zones on the CL, 13 points, $1,300. This is a screenshot that you got, Dave.
Yep, that was one of mine.
Perfect. Okay, and another one. I think you guys get the idea here. So we showed you the NQ, the CL, the GC, and ES. All right. Right here, supply demand. Our supply demand shows you the low risk areas, where to enter and exit. So anytime price goes above the green box, go long. Set the stop one tick below the green box. Below the red box goes short. Set your stop one tick above the red box. It plots areas of support and resistance. By using this information, you can visually identify potential price patterns and where a reversal most likely will be coming.
Yeah, again, that's a great indicator, especially for swing traders, a little bit more long-term and traders that need to know kind of like where these areas of resistance and support come in at. So that's supply and demand is really popular with those guys.
Here's another example. Just visually, it's really easy to follow this. This was an NQ, $450, 90 points. It's a lot of points. Here it is. Again, pretty clean chart here. All right, let's get through this. We're almost through this, guys. Just going to show you the Autotrader and then give you guys some direction on where to get started. So this is the Autotrader here, 1221 contract. This is 12 points, got $637. Now, I'm going to show you real easily how this works. Okay, so we have the Autotrader 2.0 and the Autotrader, the original blue chip trader. So the Autotrader is 100% automated entry, exits, and stops. So this is a true Autotrader. If you wanted to, you could literally set it and go. We're not advising that anyone ever set the Autotrader and walk away. Because one, who knows what could happen? Internet could go out, your computer could crash, you could be stuck in a trade, it could be disastrous. So we'd never advise setting it and walking away. But to give you an idea, it is truly an automated system. If you technically wanted to, you could. Again, don't advise it. But it is universal, it works on any liquid market. This really helps you with trading the system and not your emotions, and it's designed to do the heavy lifting for you. So oftentimes, if a trade comes in too quick, the Autotrader will get in quicker than you typically could and will get out quicker than you typically could. Now, this is very much customizable. You can use this with the trailing stop or the blue chip. And the two main differences between the two Autotraders, and some prefer 2.0, some prefer the original. The 2.0 trades off of its own algo, not based off of the blue chip, but it'll take trades based off of its algorithm. The original takes the trades off of the blue chip, meaning when the blue chip fires, it's going to take a trade. The other one, the 2.0, does not do that. So it takes less trades. Some traders like 1, some traders like 2.0. Visually, to give you an idea, it will go in here. So this is a winning trade, 5 points. It came in here, it exited here. You can see that when it got into the trade, obviously it'll have the buy price here and this exit price there. You can pause it, close it. You can click only go longs, you can click only go shorts. Now, we don't want to imply that you're going to get the Autotrader and it's going to make you a millionaire overnight, or that it's always going to be 100% winning trades. I would be lying to you if I told you it did that. It's not 100%. It does take bad trades at times, absolutely. And here's an example of one, just so you can see it. Took a bad trade here, lost 3 points. You can identify the losing trades versus the winning trades by and it's a little bit hard to see, I know, but the red dotted lines, those are losing trades. Red dotted lines there, it's a losing trade. Let me go back. Green lines are the positive winning trades, okay? So now we want to show you some back tests. And real quick, are there back tests with losing results? Absolutely. We can definitely have back tests with losing results. Obviously, I don't want to show you losing results. I want to show you the positives because we have more positives than than losers, right? But again, I don't want anyone to think I'm coming in here and saying this is going to win 100% of the time. It's going to have some losers, absolutely. Here are some really great back test results that we pulled just recently. Here's the NQ, $1,000. People typically like to see the Sharpie ratio, 311. Max drawdown, 280. Percentage profitable, 85%. Okay. That was, there's gross profit of 1280, loss of 280, but the net profit was 1,000. Great, right? Yes. Here's another one on the ES, $1,700 profit. Look at the Sharpie ratio, 1.3. The percentage profitable was 79%. Took 43 trades. That was done looking for 9.3 to 9.10. So that was just like a week ago. The other one was 9.14 to 9.16. Okay. Great. Let's do this one. This was 615 profit. This was an YM. 1.3 on the Sharpie ratio. 86% profitable, 38 trades. This was 5.1 to 5.11. And NQ, this one was 4.11, 4.16, $900 profit. Sharpie ratio 2.3, 34 trades, 91% profitable. All right, wanted to show you guys some quick testimonials. A lot of times I don't show testimonials because, you know, guys can be like, oh, you make those up, you're full of it, right? We've heard it all, we get it, we understand. I've tried to make this as transparent as possible here. These are emails we get. This one here was, here's my trade performance report after today for my Lilo account, needed 6,000 to qualify, 2/3 of the way there. You can read the pasted page here. And I took it and it was $4,000 in profit. This right over here, sure thing, use whatever you wish. Use my name if you want. We need to spread the word that you have predictable and very useful indicators, purchasing buy-side globals like buying an asset. It's a value asset and a keeper, which is very nice. Sorry. And then Adam, day 2, plus 10 points, calling it for the holiday. I'm very happy with the 10 points. Thanks so much. I'm glad I found buy-side global. Another one, by the way, finished up 1350 today using order flow and blue chip. I mean, I just literally copy and pasted these. What were you going to say?
I was just gonna say we don't solicit these either. It's nice when they just show up in the email, and that's really makes me feel good about what we do, because even when it all comes down to you have these great indicators, but if the person's not able to pull the trigger on them, you know, it doesn't do any good. But the fact that the people are able to make trades and make money off that really feels good about us. And one other thing really quickly I wanted to say about the Autotrader, I'm not a computer programmer. I'm not anywhere close to tech. I even had trouble getting in this webinar today. But
you did.
I did. That's the truth. Lee will even testify for that. But it's so easy. It's not. Don't worry about if you're worried about, you know, I've got to be a developer or anything like that. You don't. It's just that gives you options that you can click it and customize it. Another thing, really quick, just because I talk to folks on the phone all the time that make some mistakes sometimes, please trade it on Sim for a while. I mean, it's great to think I just bought this package, I'm going to turn it on, and in the morning I'll be a millionaire. But trade it on Sim for a while, get used to it, find out what the parameters are. You've got to set your own risk assessments. But in case you're wondering about that, you know, you can set up a stop loss, you can set up a profit target and things like that. Just so you know, I just want to pass that on as far as Autotrader. It's nice to see it work at night and take the stress off me having to worry if, you know, trying to hold a position long and be nervous about it.
I want to, thanks so much, Dave. I want to get to questions here a little bit real quick. This comment right here, I'm having wonderful success to buy sell zones, MTA. Here's a screenshot of my progress from the trade performance. I'm trading 4 combine accounts on Lilo. And here's his chart real quick. So it's over a month period, 4.5 to 5.6, 2021, $2,000 in profit, 1.2 Sharpie ratio. I want to show you guys that. That's from a customer sent in to us. we get a lot of really nice feedback and emails from you guys. So we do appreciate it. And we really like to hear from you guys. It helps us out. Thank you. Okay, so here's the offer, and then we'll go to questions. Obviously, we have unlimited tech support. Whatever you need, whenever you need it, we can log into your computer. We have live phone, email. You can get me on the phone. You can get Dave on the phone. You can trade one-on-one with Dave. You can talk with us, chat with us, email us. We're always available, almost too much. Today, what we're going to do is 20% off any of our indicators. Okay, so if you guys want to purchase, we're going to do this for 48 hours. So through today's Saturday, Sunday, I guess through Monday. We're going to do it through Monday. Okay, 20% off whatever you want to buy. Just enter BG1020. So please write this down. I forgot to tell you guys to write down our website and our email. So email is info@buysideglobal.com. Info@buysideglobal. You can make this purchase at buysideglobal.com, and it's BG1020. Okay. Now, real quick, as an additional bonus for the first 10 people, and we get a huge response to these all the time. The first 10 people that sign up that purchase anything. So if you go in and you buy supply demand or the blue chip, we're going to include the VWAP for free. So basically, giving you 2 for 1. Anything. First 10 people, you buy blue chip, you get the VWAP. You buy the supply demand, you get the VWAP. First 10 people. So jump on that. And for some of you, real quick, that might be like drinking from a fire hose here, let me help you and point you in the right direction. If there's like too much product, let me go with this. I think everyone will back me up on this. If you don't know what to get, these three here are our #1 sellers. Bear Bulls, blue chip, trailing stop. You cannot go wrong with any of those. If you buy the Autotrader for $1,500, if that's too rich for you right now, that's no problem. But if you do buy this, tremendous value because you get the blue chip, the trailing stop, and the Autotrader. So essentially, you're getting an Autotrader for only $500 more. So tons of value there. But again, if $1,400 is too much, completely, well, it's technically now $1,200. This would be $400. These are all $400, right? 20% off, $400, and this would be $1,200. But if that's too much, get a blue chip, get the Bear Bulls. This is an ideal combo right here, the blue chip and the trailing stop. You cannot go wrong with any of these. They're all amazing. So here's our details. You can call or text us anytime. Here's the number. Please write down. Here's our email. 20% off code. And Lee, can you see? Yeah.
I've been typing in your codes and phone numbers and stuff like that.
So is there any way for me to answer questions? I'm not retarded, I promise.
I can see some of those. Cool. I can see some of those too. I just wanted to chime in really quick before you two visit. Just trader to trader, and Lee probably can relate to this as well. When you look at an investment in a business, no one blinks an eye that they're going to have to buy trucks to do a delivery service or a barbershop to cut hair. But they kind of freak out sometimes when they realize they're going to put some money into this business. Think of this as a business and a business investment in yourself. And if I could have something that's going to make me, I don't know, 15, 20 ticks extra points a day, you're paying about 2 points a day over the average of 1 week to pay for an indicator that's going to help you make a lot of money over a long period of time. That's been my experience. So I just want to put that out there. So thanks. And
I appreciate that, Dave. And also got to clarify, we're not promising that you'll make 20 ticks a day, though.
Yeah, absolutely.
We're not promising that, obviously. But if you do, fantastic. And a lot of traders do and make more or less. You get it. Sorry, Lee, go ahead. How do I answer questions? How do I see these?
Okay, if you like, I can ask you the questions. I see them. I'd be happy to just send them over.
Okay.
And I won't censor anything. I'll ask you everything that everybody asked, okay?
Sure.
So the first question is really very interesting from a gentleman, I think it's Adalaha, I hope I'm pronouncing his name right. Is the idea to go to what indicators reveal and base action on indicator signal before looking at price action? Some traders are able to trade clean charts, and this confuses me because you find that they are profitable without indicators. So what's your opinion? Can you trade clear charts, or what's the advantage of indicators, I believe is how he's asking the question.
Okay, so that's a great question, right? So it all depends on how you, what you're most comfortable with trading. Now, obviously, I deal with traders who prefer indicators, whether they're buy-side global indicators or someone else. So it's a preference. For me, and I know for Dave, and I know for other members on our staff, they would never trade without indicators. So if you can see price action, if you can see where to get in and enter without indicators, don't purchase indicators. You know, maybe it's not for you, and that's okay. We want you to be successful and profitable, and if you can do that without indicators, great. I personally can't. I know Dave can't. I would never trade without indicators, specifically buy-side global.
And I have claims of people say they don't use indicators, but I have no evidence. I've been in chat rooms and they've said, "Hey, I'm not using an indicator," but I have never seen evidence of that. I'm not saying people can't do it, but if you think like Adam said, if you think you can do it without it, that's great. But sometimes I'll clean up everything off my screen just for fun. I'll look at the charts and I think, how would I know where to? I would just be guessing, and guessing is just gambling in trading. So if you need to find an edge to be consistently profitable in trading, you've got to find an edge, whether it's using trading on the news or having some kind of informed indecision. You've got to have an edge to be consistently profitable. For me,
what's the next? Thank you so much, Dave.
Okay, so George asks, what's the Autotrader win-loss record? My favorite question.
Yeah, we can't answer that. I would
seven.
Never be able to answer
the answer
that.
seven. The answer 7.
If you don't mind my butting in, you know why we can't answer that, George? Because what if you're trading the ES versus the NQ, the market's trending versus not trending? There's so many elements that would affect that, from being a positive trade or a negative trade, that it's almost impossible to come up with a correct answer. I mean, the answer we want to give is 90%. But you can't, because the markets are not 90% the same all the time.
Yeah, that's not honest to say that. Yeah, and what if your profit? What if you're taking 2 ticks and 10 ticks losses? I mean, some of it depends on you as well. So, yep.
Okay, next question. What did the supply and demand zone indicator zones mean? Do they use order flow?
So yes, all of our software is based around order flow, and it absolutely uses order flow. And I don't know if I understand that part of the question. Here's what I'd reference though. If you go to the website and you go under indicators, we have videos that go through each indicator. So click on supply demand, there'll be a video or 2 on it, and watch that. And then if you have further questions, just email me.
How often does Autotrader blow itself up? That's an interesting question.
I've never had that question before. It doesn't, because we don't allow it to.
I've never seen it blow up.
Yeah, I'm sure it could if you didn't put the settings in there, right?
Yeah,
like anything.
with those settings in there, you say I want to have a daily stop, and if it gets hit, that it stops the trading. It just shuts itself off.
Okay. And what was the price for the Autotrader? Someone's asking.
Sure. So the Autotrader is $1,500, but for you, between now and end of day Monday, $1,200, because it's $300 off, with 20% off. And it includes this. It includes the trailing stop. So basically, all 3 of these, you're $1,500. So the only thing left out is the goals.
And as a trader, I always think of everything in points of the ES. That's 24 points on the ES. If you,
Very true.
You'll make that back pretty quick.
Okay. And do you have FX charts at all? Someone was asking.
We did. I don't have any FX charts up. That's something we should incorporate.
Well, you can absolutely use the system.
Absolutely, yeah. We do have folks. Yep, we have folks that buy our system and use it on trading forex. I've steered away from that. That's just not my style.
Okay. When are you releasing the updated indicators, and will you inform your customers by email?
Yeah, okay. I bet I know who's asking this, and I don't blame them because, I'm a slave to the programmers, right? They tell me one date, and then I go to my tech team, and they're telling me a date, and then the date comes and it passes. But literally, I've had it on my desktop, and then we've been running through it, and there was like a little bug. We sent it back to the tech team, told them to fix it. I'm going to say by Friday, the latest. Please, guys, don't kill me if that doesn't happen, but it's going to. We're 95% there, but it's going to be by Friday, the latest, without question. Feel free to email me. But yes, we're going to send it out. You'll need your machine ID. We're going away from license keys and we're going to machine IDs. So when you email in for the update, when you own it, to make things quicker, email in with your machine ID. Again, we're going away with license keys and to machine IDs.
Okay, and two final short questions, it looks like. Do you have a trade room or is there a trial period? Those are the last two questions.
So Lee and I were just talking about this. We used to have a trade room. No, we don't have a trade room any longer. It was a long time ago. And we don't have trials, no.
Okay, so you know what? It's a great question, Adam. If you don't mind, would describe a normal day. If someone's a buy-side global customer and they say just bought your Autotrader and an indicator, what would a normal day be for that customer? Would they talk to you in the morning and set their charts up and trade, talk to you at the end of the day? What's like the normal way that people interact with you as a way of being your customer?
Well, so when you're brand new, a lot of guys, so there's several different types of customers. There's some customers purchase software because it's really simple, it's super easy to install, and they're experienced traders and they don't need any help. They're just off to the races. They'll email in once in a while a question. Then there's others that are new and this software is perfect for newer traders and they'll need more guidance. And we can get on TeamViewer, we can get on live chat or on a phone call and go through it. And oftentimes there's people that need one-on-one instruction and we'll set them up with one of our traders. Oftentimes we'll set them up with Dave and they'll trade one-on-one with Dave until they get the hang of it. Now we have unlimited training. So sorry, that was my daughter, guys. Anyways, so we have unlimited
trading from home.
We have unlimited trading.
We will take care of you. You purchase our stuff, much like Lee does. It treats it like a family business, and we are going to support you however we can and whatever you need. Well, sometimes I've gone everything from helping them on TeamViewer, taking over their computer, helping them download NinjaTrader to get started with that, showing them how to get in their broker's account, to using our software and trading side by side with people. So we'll take care of you.
We have no limit on it. Whatever you guys need, we'll do it. So we're here to support you. We definitely support all of our clients. And we'll hold your hand all the way through if you need it. Make sure you guys jump on this offer. And if you want to be the first 10 to get the VWAP included, no additional cost. And Lee, thank you so much. This is awesome. Lee, I love your program. So happy to be here. And I'll let you take it over again to the next one.
Well, Adam, Dave, thank you very much for joining. This is the first time we've ever done this on our own. It was a lot of fun. And we'll do it again in the future very soon. So thanks for taking part. And I'm going to see if I can take the charts back from you.
Okay, I'm here.
Which I should be able to. And I don't want to show myself. Okay, I'm going to have to. Yeah. Okay. Thanks so much, guys. And I'll see you in the near future.
Thanks so much.
Bye-bye.
Okay, folks, so you can hear me. I'm going to get Rory and Mark. I'm going to get Mark set up. I got to be able to unmute Mark's mic. And if there's any other extra questions for buy side, you can type them in and we'll try and answer them before the webinar is over. And Rory, I'm not able to unmute Mark for some reason. I'm thinking maybe you're muted on your side. So you could try and unmute him, and I will give you the charts. which you should be able to take the charts over now, I hope. I do see Mark's chart, and I see his mic, so we should be able to hear him.
Can you hear me okay, Lee?
Yeah, Mark, can I give you a quick little intro?
Sure.
Okay, so I want to welcome a friend of mine, Mark Sachs from Right Line Trading. We've been working together as trading partners since I joined 10-Minute Trades. It's probably about 5 years already, Mark. So I want to thank you. Mark's one of the finest software designers I've met. He's a great trader, and they have a fun, exciting trade room. And I want to welcome Mark Sachs from Right Line Trading.
Hey, Lee, thank you so much. And really, my hat's off to Lee for being just providing a super good service, being incredibly forthright and honest. And it's very, very, very rare in this industry to come across a guy like Lee. And I thank everyone for coming aboard today. What I'm going to be reviewing is our Compass trading system. Now, it's a totally unique system, and it's trading software unlike anything that you've ever seen before. Now, I want to start with this disclaimer. Just hang on 1 second here. That all signals and trading opportunities that we provide are for demonstration and educational purposes only. Participating in trading in the markets involves substantial risk, and it should be understood that a person can lose a substantial amount of money. Always carefully consider your financial position prior to trading, and never risk more than you can afford to lose. Now, if you stay to the end of this presentation, it's going to be about 45 to 50 minutes. What we're going to do is we're going to add in a lot of software modules that normally we use as standalones and charge as standalones. We get quite a few purchases on them as standalones right off the website. So they're all going to be bundled together, and we're going to give you a really large discount price. And you're going to get a nice special free bonus, which is definitely going to help you trade. Now, what I thought I would do is I would show you what we call our Reddit busters or our Wall Street bets stocks. We put them in our market scanner or our dashboard every morning. Now, this is essentially almost going to hand us the entries. It's going to analyze the software, see that everything is set up perfectly, fire a signal, and all we've got to do is click our mouse. You're not going to understand exactly what all the software, what all of the different indicators mean yet, but I just wanted to acquaint you with the workspace. Now, this is a stock called Created. This is the multi-time frame assessment and trend. We know that it's aligned to the upside on 3 time frames in a row. Here's our 50 heading up. Our 15 heading up. There's our measure of volatility. Here's our VWAP. Here's our Ligier oscillator, and that %K line is being calculated on a multi-time frame basis. The software fires an entry right here. You're going to see it on your dashboard, and it's even going to do more than just fire that line. And it's going to light up your dashboard like a Christmas tree. Unless you're really asleep at the switch, you're going to get an entry right on this candle. Created would have exploded up, implied volatility on an at-the-money call, would have skyrocketed in price. The stock went up $2.44. The at-the-money call was up 401%. These are all trades we took. There's the out on the move to yellow, which indicates that we're in chop. Here's a move to the downside on GameStop. Fires multiple signals. Each one of these lines represents a bar. We're on a 1 minute. We've got multiple 1 minute bars. Get in here, Down you go all the way out on a change in the multi-time frame direction. $63.42, 427% on an at-the-money call. Now here's AMC, comes right down to support, fires a scanner signal. Then you get multiple signals. You want to get in on the first. Up you go. It hits resistance, but moves right through it. Out on chop, the yellow, $18.29, 187% on an at-the-money call. Here's Alfie, multiple scanner signals. Now this arrow was really placed here too early. You have to wait till this red line is breached. That's resistance. Up right in here. Up you go. $7.21 on a $12 stock. 387% at the money call. Up and here is the last one is Tilray. There's the alignment, multi-time frame alignment and trend. The gears locked at the 100 line, indicative of tremendous buying pressure. There's the 50, there's the 15. Everything is aligned. Up we go. There's the short squeeze, and price rockets to the upside. $3.74, 238% at the money call. Now, there are lots of marketers on social media right now. They're on Instagram, they're on Facebook, they're on YouTube. I see them all the time, and they are they're selling you all kinds of different. Excuse me for 1 second. I knew this would happen. This is my son. Hang on 1 second. Okay. I'm a single dad. I have to take a call for my son. Now, they're all providing you with get rich quick schemes, things like that. I'm telling you, these are marketers. They're not traders. And the one thing that you're going to find is that I'm with you every morning. I trade my live trading room shoulder to shoulder, along with 500 other traders. I take every trade that I call in my real money portfolio on Thinkorswim. And I just want to give you a little bit of a snapshot of my background. I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years, and I graduated in with the degree in applied mathematics. Within that field, I focused on mathematical modeling and the optimization of closed systems. I did mathematical modeling for the U.S. Navy on underwater decompression schedules. When I was completed with that work, I turned that in with my mentor. I received my diploma with special distinction for that work. I also graduated summa cum laude with honors. And after graduation, I was elected into the Phi Beta Kappa Honor Society for graduating the top 2% of my class. I wanted to go into full-time academics. I applied for a number of different positions, and I decided just to stay in Philadelphia. I became a full-time professor at Thomas Jefferson University in Philly. So I went from West Philly to Center City, Philadelphia. I published 15 peer-reviewed articles in top-tier journals. I consider myself to be first and foremost a scientist, a teacher, and an academician. I've taught an enormous number of graduate students and undergraduate students. I've mentored more than 30,000 traders, either in group sessions or individually. I've spoken internationally in many countries. Last place I spoke was in Manila in the Philippines. It's been that way for a while, just because right now I think it's a little bit dangerous, at least in my opinion, to travel. So I've kept the traveling to a minimum. I spoke domestically last in Dallas, Fort Worth, to a large traders group of very wealthy traders. And hopefully I'm going to be able to feel comfortable to start speaking again. Now, if you're here today, it's very likely that you have a problem with trading. Now, every day in my live trading room, I always get to talk to traders. I get to talk to a couple hundred of them. I mean, we're sort of a small trading family, and I get a lot of feedback at the end of every trading session. We really turn it into an educational teaching session. There's some days where we'll only trade for 20 minutes, hit our profit targets. Maybe I'll teach for an hour to an hour and a half. So I know exactly what's going on with all of my traders. And the most common problem that I hear is that they have good days and then they have bad days. And the thing that they cannot gain is consistency. And really, that's the key. They're either sort of on a treadmill where they just hemorrhage, their account hemorrhages in commissions, or they just can't get the traction that allows them to trade profitably. A lot of traders complain of blowing several trading accounts, having to refund, having to put money back in to stay at work in this discipline. A lot of them have purchased expensive software in the past that, despite promises, simply does not work. And I'm telling you, that has come to an end here. This is extremely powerful software, and I trade it every single morning with you. Now, when I left Jefferson, and I had to for personal reasons, which I'm going to show you way towards the end of the webinar and just mention in about 5 seconds, there were lots of things that I could do. I could have applied for academic positions. I'm in South Florida. I know Lee is up in New York City area. And I could have applied for the University of Miami, and very likely would have gotten a full-time academic position there. But what I decided to do was to go into trading. I felt that my background in applied mathematics lent itself towards mastering this discipline, because day trading is all about mathematical modeling. It's all about the numbers. It's all about assessing that the software that you use is effective via specific methods of back testing, and then beta testing, looking how it trades in real time. And I looked at what was out there, and I saw that it was really just an amalgam, this huge conglomeration of software that all used the same trading methodology. Now, a lot of it was really cleverly disguised. It was a box with a different colored wrapping and a different colored bow, but the underlying principle that drove it was still exactly the same. And pretty much that was all that was out there. And that's why 95 to 98% of all day traders and swing traders go broke. And that's a number that has been operational going back over 100 years. And there's absolutely no reason it should be that way. If we look at other scientific disciplines, and trading is a scientific discipline exactly like any other discipline, like medicine, like architecture, like electronics. It's not an art. We don't trade it dogmatically. We trade it based on mathematical principles. And if we look at the evolutionary process that's taken place, say, in electronics, where 100 years ago we were communicating via telegraph. And today we have cloud computing, we have streaming media, we have smartphones. And we look at medicine in the pre-penicillin era to now we have complex immunotherapies, and we look at day trading and swing trading 100 years ago. It was fibs, it was rising triangles and falling triangles. Fast forward 100 years, we have fibs, we have rising triangles and falling triangles. Nothing has changed for 100 years. The vast majority of day traders and swing traders have gone broke on exactly the same trade methodology, with no one doing a methodological analysis, a mathematical analysis to determine why it is the case. Now, like I said, I have 500 traders in my live trading room. We all feel like a small trading family. Like it's our job to take the money from all the other small retail traders that are out there. Now, we make money 8 to 9 out of every 10 trading sessions. I can't see that we make money every single trading day, but I'll tell you that there are traders in my room that approach that. They are just stellar traders and take a very, very rare trade down day. And my goal is to make you a better trader than I am, is to see that your performance outstrips my performance. And that's the goal of the live trading room. We're going to trade shoulder to shoulder, elbow to elbow, and every morning I'm going to make the calls in advance. But you're also going to have some degree of discretion. And when you get proficient enough, you may be able to get a winner or two that I just miss. Now, I want to do a very, very quick recap as to why all the software that's out there and been out there for the last 100 years simply does not work. And let's just fast forward. This is just a 5-minute recap, and then we're going to move forward with the software, our Compass trading system. But let's do a quick jump back 400 years to when the Japanese rice traders were watching a financial transaction. Now, what were they looking at? They were looking at a scenario where, say, there's 100 kilos of rice. These were Japanese rice traders, and they wanted to know who was in control of the transaction, the bulls, the bears, the buyers or sellers. So there's 100 kilos of rice, 100 buyers on one side, 100 sellers on the other. So what there were 200 traders in the aggregate, and they made a key assumption that in this particular trade or this particular transaction, those 200 traders in the aggregate all had equal power. The power of each individual buyer was equal to each individual seller. So the 200 traders, again, in the aggregate, all had equal power. No individual trader had the power to pull the transaction in their direction and overrun the rest of the traders in the transaction. Now, from that assumption, they created Japanese candlestick patterns, and they're very elegant. I've read Steve Nissen's books many times, and I understand them really thoroughly, and I think it's worthwhile to understand them because there are some general principles that Japanese candlestick patterns highlight, which are helpful. But if you try to trade price action off the right edge of the chart, you're going to go broke incredibly quickly. And that's because what they surmised, that the power of each individual buyer and seller in the aggregate were equivalent, is no longer operational in today's markets. So this gives you no future predictive value whatsoever. And there's still an enormous number of people trying to teach you to trade pure price action. Now, what's going on in the markets today is this, and this is really key to understand. There's an enormous universe of small retail traders, of which we are a group. Now, in Q1 of 2021, the first quarter, 5 million people opened up new trading accounts. If you look at Robinhood and all the major brokerage firms, if only a small percentage of those 5 million traders went into day trading and swing trading, you could see that the universe of small retail traders is absolutely enormous. The problem is that we do not have the power anymore to create a trend. It's the big institutional players in the market that create the trend. And these are the traders that we have to follow. Now, these big institutional players, who are they? They could be Deutsche Bank, Bank of America, HSBC, any one of dozens of banks located worldwide that when they step into a financial instrument, and it doesn't matter whether it's a futures market, like a currency pair in the futures market, or a currency pair in the Forex markets, a futures market, a small cap, mid cap, or large cap stock, it's going to go in the direction that they decide. Our assumption is the direction it's going to go is irrelevant. The big institutional player can also be a 401k plan. It could be a mutual fund. It could be one of dozens of hedge funds. It could be Wall Street money like Goldman Sachs or JP Morgan. The point here is that we are helpless in determining the future direction of price. And the only thing that does is big institutional money. We as small retail traders are totally incapable of creating a sustained trend. And the only thing that we can do in today's market to trade profitably is trade in the same direction as big institutional money. If we don't, we're going to consistently get run over and stopped out, and they're going to eat our contracts or lots or stocks for breakfast, because we're going to have to buy them back and get stopped out. Now, when you wake up in the morning and you open up your charts, you should be really excited, have that a little bit of adrenaline surge, and really be raring to go because you feel confident that you're going to make money. Now, but if your mindset isn't correct, it's going to cause you a lot of problems trading. Now, the vast majority of small retail traders like us, and I would say 95 to 98% of them, look at their number one goal when they open the charts is that of grabbing a winner. And that is wrong. The number one goal you have when you open your charts is to sidestep a loser. You want to sidestep every potential loser on the chart. That's your mandate. The difference between being a professional small retail trader and being an amateur small retail trader is not the ability to get winners. Everybody gets winners. It's the ability to sidestep losers. That's what separates the tremendously successful traders from those that go off the edge repeatedly. Now, first, we need our software to define chop. The chop is when no institutional money is present and only we small retail traders are in the market. And all we create is chaos, disorder, and disarray. And this is a time when we cannot trade because we know that at all costs, we want to avoid losers. The fact is that in a given week of trading, and you'll see that every week in the live trading room, if we can avoid 99% of the losers, we only need 5, 6, 7 really successful trades to make a huge amount of money. So on a multi-time frame basis, we're going to look at what price is doing, and the software is going to make an assessment, which I'm going to show you, and determine when we're in chop. When we're in chop, we stand aside. When big institutional money steps into the market, and it may not step into your financial instrument for that whole day, but when it does, we're going to get a unique alignment in the software. It's going to tell us that big institutional money is driving price up. This is a market independent, time independent force. It doesn't matter what you're trading, and it doesn't matter whether you're trading time tick, range, Renko, Unirenko, or a time-based chart. When big institutional money comes in and drives price long, all we can do is ride their coattails long. If we don't, and we take a short position, we're going to get run over, stopped out, and lose on the trade. When big institutional money sells that financial instrument off, we have to ride their coattails short. There are going to be a ton of small retail traders position long. We're going to run them over, stop them out, and take their money. That's where we're going to make our money from. We're not going to make our money. In fact, we're never going to be able to take money from the big institutions. They're going to be the entities whose coattails we're going to ride to run over all the other small retail traders that are caught in the wrong direction. Now, that was probably you before, but it's never going to be you again. We're going to always be positioned to trade in the appropriate direction when we're ready to go. Now, just to do a quick recap, we cannot trade price action. Price patterns are just a slightly more elegant way of looking at price action, and they have the same basic underlying assumption that I just went over. Now, Fibonacci, Elliott wave, and Gann theory all make the assumption based on their mathematical formulas that they can determine market sentiment, i.e. levels of support and resistance, based upon a mathematical formula. They are no longer operational. They don't work. Big institutional money cannot give a hoot about a 67% Fibonacci retracement level, a 95% Fibonacci retracement level. When big institutional money comes in, it's going to just run through fib levels like a hot knife through butter. That 5-wave Elliott pattern, the more elegant Gann theory formula that describes areas of support and resistance are also just going to be cut through like they don't exist. And I believe that Fibonacci, as an indicator, has taken more money out of small retail traders' pockets than any other single indicator out there. It's been around for 150 years. In fact, Fibonacci was a 13th century mathematician. It's always out there, and it does not work. We've done a 2-year look back on it. The levels break or hold arbitrarily, and they have no predictive value off the right edge of the chart. The last thing I want to leave you with, and it's very, very important in our look back, is trading divergent signals. Now, divergent signals are top calling and bottom calling signals. When you get an oscillator divergence or MACD divergence, it's supposed to tell you that the market is going to reverse in direction. And I can tell you that we can never call a top or a bottom. So if you've been trying to call them before and you've been proffered and taught by your mentor to make an analysis to trade tops and bottoms, those days are over, because there is no mathematical formula that can call a top or a bottom. The tops and bottoms are called by big institutional money. And you and I both know they can take any financial instrument and take it long and put it in an overbought position for not just a few minutes, but they can do it for a few hours and a few days, and in some situations, even a few weeks. So all our divergent signals will fail, and the market will continue to rise. Now, here's what big institutional money really likes to do. They will take a financial instrument long, and they'll take it up high, and then they'll step aside. And when they step aside, an enormous number of small retail traders like us will all hop in the trade to take the retracement back to mean price. Now, we define the mean as the 50. So they're all in riding price short. Big institutional money is not present, so we're not going to be present. We're going to let them ride that price down, because oftentimes what happens is big money steps right back in, and they push price back up, and they push it up even higher. And what all those small retail traders who are positioned themselves short happen is they all get stopped out. And big institutional money does this for a couple of reasons. First of all, what they've created is called a bear trap. They create bear traps at tops and bull traps at bottoms all the time. So they've got a tremendous number of small retail traders caught short. They go long. And as we get run over, we help their trade evolve smoothly to the upside. The big institutions incur minimal slippage. There's greater momentum. The power of their trend is stronger because they use us as we get stopped out. We have to buy back our contracts, our lots, or our shares. We push price up and we provide it with tremendous liquidity. So we are never going to call a bottom or call a top again. We're simply going to ride the coattails of big institutional money. When they're in the trade, we're in the trade. When they step out, we step out. So here is the workspace and how it looks. And the first thing that we have to define is called market structure. Now, you never hear market structure discussed. You hear price action and price patterns all the time, ad nauseum, in fact, but you never hear anyone talk about market structure. Well, market structure is sort of the foundation for what we trade. If we don't define appropriate market structure, we cannot trade, because market structure ultimately is set up by big institutional money. Now, we use our 15 and our 50. Now, these are EMAs of EMAs. They're proprietary lines, but they are the 15 and the 50 period, and our pivots to define market structure. Now, when the 50 is heading up, the 15 is crossed the 50 to the upside and is heading up. That market structural setup provides us with a long only trade. We can only look for an entry to the long side. Now, you're going to see that we do a triple screen analysis for everything. We don't let our trading chart govern what we trade. It's the two higher multiple charts or the two higher multiple time frames that really do it. But as an example, I wanted to show you what market structure means. And here's a market structural setup to the downside only. If we get a retracement, we're never going to take it. The only thing that we can trade here is short. And if we get a retracement, we'll wait for a signal and we'll roll it short again. We get a retracement, we wait for a signal, we roll it short again. Market structure, which is this type of structure, is set up by big institutional money, tells us that the only thing we can do is trade to the short side. If a retracement should head back to the 50, we're never going to be on it. We'll let the other small retail traders try to make it back to the 50, but they will fail a tremendous amount of the time. We're just going to trade short. Now, we have three major swing pivots, and these tell us where the market is turned that day. We could have more or we could have less, but the more pivots that we have, the more difficult it is to find a perfect trade. And the fewer pivots we have, if we have fewer than three, then we have the potential for walking ourselves into a loser. And via mathematical model, we've determined that the three major swing pivots in the course of a trading session are critical to helping us define market structure. Now, this is a pivot where prices turn multiple times. I simply colored the pivot white, blue, and red, but that they're not indicative of support and resistance, just where prices turned, and whether they act as support and resistance is determined by where price is. So you can see as price approaches the pivot, we know there are a ton of sellers here, and we're not going to trade into it. Price gets rejected. When it comes down, we know there are a bunch of buyers here. Price gets rejected. Into sellers, price gets rejected. Now, the only other important thing to understand is that a pivot is not just a discrete line. It's an area. Excuse me, I just want to get a drink of water. as price moves up into this area, let's say that we're trading the futures market, we're going to give it 4, 5, 6, 7 ticks of distance, because we know that the sellers here are going to start to influence price. You can see how price pushed towards it, but couldn't even get close. That's how strong the selling pressure was in this pivot. Now here, price went right into the pivot, but couldn't break it. Up here again, price tried to approach it, but couldn't even get close. So we have to give pivots a lot of room and make the assumption that every pivot is going to hold on every trade. Sometimes they'll break and it will evolve into a winning trade. But since we can't predict that, we have to stand down. And assuming risk on a trade is something that we cannot do as professional small retail traders. Now, here's our triple screen method of data analysis. And this is really the core of our trading system. And it shows you why our indicator analysis has tremendous forward-looking value. Now, everyone's always complaining that the indicators below their chart, and there's some traders that have 7, 8 indicators, they all have no value whatsoever. If they're using data from the trading chart to create their signal. If you're trading a 2-minute and the indicator is assimilating data from the 2-minute, it has no forward predictive value. So what we did via mathematical modeling is create this triple screen method of data analysis. And we never use in our indicator analysis any data from the trading chart itself. We only look at the 2 higher multiple charts. And there are probably a lot of traders who are listening to this now who do use a higher multiple or longer time frame or longer chart. Remember, I always had this predisposition to say time frame when you don't have to trade a time frame based chart, but they'll look at a longer chart to sort of give them a direction, sort of use it as a compass, which is the name of the system actually, to tell them the best direction to trade. And that's exactly what we do, but we do it a little more methodically and using a fixed mathematical formula. So if you're trading a 2-minute, we take the 2, we multiply it by 3 to get 6, multiply the 6 by 3 to get 18, and all the data that is placed into the indicators comes off the 6-minute and the 18-minute. We don't care about any data from the 2-minute. If we're trading a 377 tick, we're going to look at the 2 higher fib multiple charts. Now, fibs have no ability to predict market sentiment. Fibonacci retracements and extensions are useless, but Fibonacci numbers themselves have tremendous symmetry in nature, and we're using them exactly the way the mathematician Fibonacci intended them to be used. And these 2 higher fib values really give us a great ability to take a higher multiple assessment of price when we're not trading a time-based chart. On a 5 range and 5 Renko, we're going to look at the 8 range and the 13 range. Now, if you're not trading a fib multiple, it'll default to the closest fib multiple and then take the 2 higher. So it does that automatically. So if you're trading a 4 range, you're going to default to a 5. If you're trading a 6 range, you're going to default to a 5. 7 range, you'll default to an 8. And if you're trading a Unirenko, which I like to trade on futures, if you come into the live trading room with me, the Unirenko candle size depends on the market we're trading, but the indicators do an analysis and provide us with a 2 higher multiple assessment as to what we should look at. A 2, 5, 10 looks at an 8 and 13 range. The key here being that we do not look at any data from our trading chart. It's the 2 higher multiple charts that provide us with the data that give us the forward-looking ability to use our indicator analysis to tell us what price is going to do on the right edge of the chart. And that is all that matters. I mean, that's where the pedal hits the metal. If we can't determine how price is going to move off that right edge, we can never trade profitably. Now, there are three key metrics that determine money flow. They let us know when the big institutions have stepped in and are pushing price. There are a volatility, and the volatility is calculated on a triple screen analysis. Their trend on a triple screen analysis, momentum on a triple screen analysis. When they all align, you're going to see, we know that big money is the only thing that can create this very unique alignment. Now, the first thing we're going to do is I'm going to show you momentum. Now, to calculate momentum, we use the Laguerre oscillator. Now, this percent K line is being calculated off the two higher multiple charts. This is a 5-minute of PayPal. It's looking at the 15 and the 45 minute. Now, it's hard to look at its forward-looking ability here, and I only put this slide up to make a couple of points. One is, I think a lot of traders are a little bit confused about what momentum in the markets is. Now, momentum in real life is if you're in a car and you hit the gas and you speed up, and the rate and change of speed is positive, momentum is increasing. You hit the gas and you start to slow down, momentum is decreasing. You speed up, momentum is increasing. But in the markets, momentum has nothing to do with speed. It has to do with the sequential evolution of buying pressure and selling pressure. So as the Laguerre line moves up and locks at 100, we know that the close is sequentially getting tighter and tighter to the high, because big money is in the trade, and they're not only pushing price to the upside, but they're pushing it to the upside within sequential intensification of buying pressure. That's the only thing that can lock this Laguerre at the 100 line. In fact, this 100 line lock is a really seminal moment in the markets. It tells us that there's so much buying pressure and that price is accelerating up with such tremendous force that we are almost, I mean, it's really unlikely that we're going to take a loser. These are the kind of scenarios that we look for. The same thing on the move to the downside and the lock short. We get this, the close sequentially gets tighter and tighter to the low. And we know that as the trade evolves to the downside, it's doing so with greater and greater momentum. Momentum's increasing because there's the sequential intensification of selling pressure. When it locks at 0 again, it's a very unique moment because we know that there's tremendous selling pressure operational in the markets. Now, the reason we use Laguerre and not relative strength, the Arun, Williams K, fast stochastic, slow stochastic, as the oscillator of choice to make an assessment of momentum is it's unique. It was never made or created to look for divergence. All the other oscillators, their number one goal is to track divergence. We not only, we don't want to see it, we don't want to trade it, and we don't want an oscillator that even looks for it. And that's the Laguerre. We've opened it up, we've tweaked it. There are multiple inputs in the Laguerre that you can change. So this percent K line is unique and optimal for assessing the change in momentum of the two higher multiple charts. Now, here are two quick examples of how that forward-looking ability helps us. The market goes from oversold to overbought. So in this move up, we know that there's the sequential intensification of buying pressure, but yet PayPal moves in consolidation. This line is making its assessment off the two higher multiples. This is PayPal on a 5-minute. It's looking at the 15 and the 45 minute. And we know that Ultimately, PayPal on our trading chart is going to explode to the upside long. That's the forward-looking ability it gives us. Same thing here on GameStop to the long side. Oversold to overbought, kind of sags a little bit, but then comes right back up and locks at the 100 line. This consolidation really moves more to the right than is delineated by these two white lines, but ultimately GameStop is going to explode to the upside. We know before it happens that we're going to get an explosion at a consolidation to the long side because of our forward-looking ability based on the Laguerre being assessed off the two higher multiple charts. Now, you don't have to worry about seeing this pattern. We're going to provide you with what's called a market scanner that's going to look for these trades and is going to hand them to you really on a platter. Now, we also want to trade in the triple screen alignment and trend. We want to take advanced micro devices long. We want our two higher multiple charts to be aligned long. We want to take the euro pound short. We want our higher multiple charts to be aligned short. So when we get that triple screen alignment to the downside, the bias indicator is going to be dark red. When it's aligned to the upside, it's going to be dark green. And when the higher multiple charts do not align, that means that we're in control of the markets and we stand down. We never trade a yellow bias signal. And we have the market structural setup long only. We want it on the triple screen. When we get it, we're going to get this area of green. And this area of green tells us that the only direction that we can trade is long. And when we get this yellow area here, it means that we must stand down. What the software is predicting for us off the right edge is the market is in chop. There's no defined trend off the two higher multiple charts. And if we try to take a trade in this environment, the likelihood of getting a loser is exceedingly high. And our goal, number one, is to avoid losers. And here's another long trade only. Price explodes to the upside. Now, on this retracement, we'll let the small retail traders make that retracement. And we're going to leverage it by taking price long. The only retracement, we're going to go long. The only direction we can trade when this is green is to the upside. Now, this is not an entry. This is not an indicator that provides us with an entry signal. It provides us with a directional bias and one that's inviolate. We cannot trade against the color of this multi-time frame alignment and trend. When those two higher multiples are not in alignment, we better step down because we know that the higher multiples are incoherent, moving incoherently. They do not have, they're not synchronized, and therefore we have to stand down. Now, here's our short market structural setup when it's present on the two higher multiples. Here's green to the upside, chop, we exit, and then we can only trade short here. Again, any long retracement, we're going to leverage to the downside. And here we are not going to trade. Beautiful trade to the downside off the red bias, telling us that the higher multiple charts that really lead price and are going to tell us the direction that price is going to move off our trading chart are all heading down. And price is almost always going to head down. Not 100% of the time, but with a tremendous degree of precision. It's going down. Now, an additional indicator we created is called our C2 indicator. Now, it's an amalgam of two individual forces. One is momentum that I already showed you, but I'm going to actually show you how we calculate it. And the other is chop. Just getting a little water, I'm sorry. Now, we want an environment to trade where momentum is increasing and chop is decreasing. And each of these analyses are done separately and then combined into one indicator, which we call the C2. When it's red, we can only trade short. When it's green, we can only trade long. It's another indicator creating for us a directional bias. The thing that is most important is to create a direction for us to trade that is almost always right. And that is, I'm going to show you, is 90% of the battle. To never get caught in the wrong direction, never get caught in the direction that institutional money is not trading, or to trade when institutional money is not present. Those are two cardinal sins that we are almost never going to make. Now, here's that %K line off the gears on the two higher multiple charts. Here's our trading chart. Here's our two higher multiples. I took off the numbers and I took off the markets because they're irrelevant. It doesn't matter what time frame you trade or what kind of candle you trade. Doesn't, like I said, time tick, range, Renko, Unarenko, doesn't matter. And it doesn't matter what market you're looking at. So I don't want you to think in terms of that. Here's your trading chart. Here are your two higher multiples. There's that %K line to the upside and to the upside. Only big institutional money can create this scenario. Momentum is accelerating. We know based on our momentum analysis, price is going to rise. That's the only direction we're going to trade. Now we're going to add an additional component where it's going to actually tell us the power of the overall trend of that move. And you'd think it would correlate with momentum, but it doesn't absolutely. So what we did was we created a chop indicator. Now the chop indicator gives each candle a chop value. And we put those values into a 15-period simple moving average. And as chop falls on our two higher multiples, then we know that the trend is getting more and more powerful. Now, I accidentally put in a short candle, a short arrow here. This is incorrect. Chop doesn't give us a direction. Momentum does. Chop simply tells us the power of the direction. So again, we're redundantly checking that we make sure that we trade in direction of institutional money in a very powerful move to the upside or the downside. And here's that C2 indicator. Now it's doing a forward analysis, a forward-looking analysis. When it thickens, price is going to rise strongly. When it thins out, price can retrace. We're not going to take it. We're simply going to leverage it right back to the upside long. When the C2 rolls, you're going to get an arrow. It's not an entry signal. It's simply a change in the direction we anticipate the market to go. When we get the arrow, it's a change in our anticipation of what we're looking for to trade. And you can see that this line is really thin and price is pretty much moving sideways. But if we were to get an entry signal, it would be a long signal only. Now, here's a beautiful trade to the downside. Now, this thickens in a forward-looking manner. So as it thickens out, price is really going to create a powerful trend to the downside, accelerating to the downside with tremendous force. I mean, we know that big institutional money is at work here. Now, it just so happens it evolved right off of that roll of the C2. It's just coincidental. This is not an entry signal. Here's another signal. Again, just coincidentally, it starts right off the roll to the downside. As it thickens, you can see the intensification of selling pressure all the way across the board, intensification of the trend to the downside. We know that big money is involved in this trade, and we're trading in the right direction, and we're very likely not only to get a winner, but a winner that's got legs. It's going to run. Now, here's simply a switch. Short only, and that's a huge short trade. Long only, brief. Short only, huge trade to the downside. Now, you don't know the size of these candles. I don't remember. And it's totally irrelevant whether these are 5-minute, 15-minute dailies, or even weekly bars. It does not matter. Now, the last indicator we look at is the VWAP. Now, in my humble opinion, you cannot trade without it. If you do, you're really trading at a disadvantage. You know exactly what a moving average does. If it's a 50-period moving average, whether it's an EMA or an SMA, it's going to look back 50 candles, look at the close of the candle, and take the average of the last 50 closes to provide you with a moving average. The VWAP looks to the start of the trading session and associates the close of the price of the candle with the amount of volume associated with that close. So it's simply a moving average that extends to the beginning of the trading session that associates price with volume. And it creates a tremendously powerful area of support and resistance, and actually gives us a directional bias. Now, here's the VWAP, and we cannot trade into it. I mean, it is a very powerful area of support and resistance. I think it is a lot more powerful than even a moving average. And we never want to trade into a 50 or a 100 or a 200 period moving average, or even into a 15 period. We don't trade into moving averages, or we never trade into the VWAP. Now, your best long trades will evolve above it, and your best short trades will evolve below it. And our indicator analysis that you're going to see now takes that into consideration. Now, the scanner looks at everything that I just told you. Maybe it's a lot of data, and maybe you want to look at 25 stocks at the same time. Maybe you want to look at 12 currency pairs in the Forex market. Maybe you want to look at 7 or 8 futures markets at the same time. It's advantageous to do so because you don't have to sit around and wait for an exceedingly low risk, potentially high reward entry. What you're simply going to do is place the instruments you're looking at into the scanner. And the scanner has the software in it. And when the software is aligned perfectly, and we're going to have more examples, you're going to get, this is a candle, this is a candle, and this is actually the software on our trade scanner as a separate module telling you here's the best place to go long. Now, I remove the indicators because you can buy the scanner as a standalone. And we have a lot of traders who use Thinkorswim. We're operational on a number of other additional platforms. But I just wanted to show you that we have traders who just buy the scanner signals and buy the scanner. And up we go on Salesforce. Here's a short signal. It just happens to be 2. It can be 5 or it could be 1, but it's on a candle. This is a 1 minute on GameStop, and you're going to take it short. Now, here's the dashboard, and here is where you're going to get those signals come up. And you see right now, the system is telling you we're getting a green line forming on Adobe and a green line forming on automated data processing. And these are perfect long trades, and you better get over there and trade them. Now, you can put anything you want into this dashboard. You can put, again, 25 stocks. You can put in 12 currency pairs. You can put in multiple futures markets, and you can trade it on any time frame or non-time frame based system that you want. It's infinitely configurable. And Sergio, if you come aboard, will do all of that technical tweaking for you. He'll set it up to your specifications, and we will teach you how to work it. But if you need us, we will always do all the tech for you. And this is where you're going to put your Wall Street bet stocks. You look at the message boards. I can show you. If you come aboard, there's a number of places where you can see the top 15 stocks. We got the top 15 mentions on the Wall Street Bets message boards. If you want to put them in, you can. You can put in your hit list if you want. I mean, I have a hit list as long as my arm at this point. I got to start cutting it. It's getting too long. Now that's an old hit list I had, which I need to get rid of. It's really months and months old. Now, here's the other thing. Let's say you step away from your computer for a minute, and one of the stocks, futures, or Forex markets fires a signal. Well, it's going to send you a text message. So let's say you have to run an errand and you're on Thinkorswim. You go to the store. I mean, the trading apps on your phone on Thinkorswim are incredibly powerful. You're at the store, you get a scanner signal, you get a text message, you open up the software. All you have to do is look at price. You know exactly the direction to take it. You're going to know the exact entry, so you don't even have to sit in front of your computer. It's better to do so, but if you walk away, you get a glass of water, you have to do something, you're not going to miss a trade again. You're going to get that ding on your phone. It's really helpful. Now, this is another proprietary indicator. I have never seen it utilized anyplace else. We created it. And what it tells you is, if you're heavily into options, and I am, and I have an enormous number of open positions. As I told you, every position that I recommend to everyone in my live trading room, I take with my own money. I mean, I'm not just calling out a trade, sort of a mandate. I'm doing it because I want to make money on that trade as well as provide you with a successful trade. Whoops, excuse me. Now, these magenta histogram bars are historical volatility. The cyan line is implied volatility. Let's say we've got a fast-moving market and we want to take an at-the-money call position, and we don't have a lot of time to think because price is moving, and we're going to take a weekly options position. Now, if implied volatility is significantly greater than historical volatility, we know the price of the option is high. We never want to buy an expensive option because we know that in order to become profitable, we have to hit the strike price and then move through the cost of the option. If the option's expensive, we want to sell it, but we can't sell it a naked call or a naked put unless we have a portfolio that's $250,000 in size. In that case, you can. It's called a cash secured position or a cash secured put or call. And a lot of big institutional traders do it. And there's nothing wrong with it, even though the downside is unlimited. What we're going to do is we're going to sell a spread. I'm going to show you how to do it. We're going to take a really juicy net credit, and we're going to tilt the risk to reward way in our favor. So we're always going to make sure that the risk to reward on every options position that we create has a risk to reward that's tilted way in our favor. For every buck we risk, we want to have the potential to make 3 or 4. So that if we get one loser, we can make it up. And then we get one 100% winner. That 100% winner will equal 4 losers. That's the kind of risk to reward that we want. Now, on the software, the entry price is exact, exit is exact. Targets are all pre-configured, and you get the scanner signal. Now, here's a trade right off on Netflix. You see you've got 3 scanner signals firing. They're going to send you text messages. It's only going to send you a message off the first line. After that, it's going to stand quiet. If you're watching the software and you miss the first line, you can get it on the second. Entry, here's the 50 heading up, here's the 15 heading up, here's the C2 heading up. Here's that multi-time frame alignment and trend. The gear is heading up. It eventually locks at 100. All this analysis is done off a triple screen. It really has very little to do with price movement on our trading chart. It's all the 2 higher multiple charts that matter. If we're trading an option, we can buy it because implied volatility and historical volatility are about the same. Up we go. It's $12.28 move, 86% at the money call. Now you can see you stay in the trade and you lose until you lose the multi-time frame alignment and trend. As soon as that goes red, you exit the trade. Now there's another line in here that I didn't even discuss. I didn't want to give you too much information. You come aboard, we're going to do multiple master classes, and I'll talk to you about this line. It's a key line in helping us get winners. And it has a lot to do with with volatility on the trade, but it's a lot more than that too. Now here's a move to the downside on GameStop. There's the scanner signal. Right here, price retraces a little bit, right to the VWAP and the 15, and then down you go, 31.24, 88% at the money call. Again, remember, it's a triple screen analysis. Here's Expedia on a 1 hour. There's the candles. There's the signal. Up you go. Staying until that multi-time frame analysis and trend has changed. Out. We copped 15.44 and 61% at the money. Now, I always have my traders set their first target on their options at 50%. At 50%, if you're trading 2 positions, you lock one and you take it off the table. You put it in the bank. And then you try to get 100 to 150% on the second position, but you move your stop to break even on the options position, and you're in that second half at no risk. So if it runs, you have no maximal potential upside. And if it comes back, you have an exact exit to close the position. $10.21 on Albemarle. I mean, I only put this stock up because it's one of my favorites to trade. I've been trading it since it was 25 bucks. It's now $225 around there. There's multiple scanner signals. Obviously, the first one is the best one. There's the VWAP, we're above it. There's the 15, there's the 50. Everything is aligned to the upside, out on chop. Here's CarMax, up 1664, 92% at the money. Now, here's another swing position I'd recommended in my Options Alert newsletter. This wound up closing out for nice money. You can see it's sitting there. Like I said, I take these positions live. Now, here are the Qs, $3.21 to the upside. It's a 2-day trade, 61% at the money. There's the first signal. You get additional signals to enter all the way across here, and then even all the way over here. You can see what a perfect trade it is. 50's up, 15's up, C2's up, multi-time frame alignment's up. The gear is above the 80 line right here. Then it locks at the 100 line. Everything is perfect. Scanner tells us, let's get into the trade. But this was the best place to take it right here. Now, here's a 32-day trade on the Qs on a 4-hour bar. If there's any question about swing trading it, that should answer it. It's 24.21, 24 bucks, 148% on a much longer term time frame. Here's $6.21 on the SPY. There's your entry. Up you go. Out. on CHOP. Now, everyone always asks me, what does a loser look like? Well, a loser looks just like a winner. You get the scanner signal, you get the entry, and about 12% of these trades will just roll over and give us losers. The system will act to limit your losses, but there's still forces present in the market that I have not yet defined, and they create some losers. It's not a perfect system. And if I didn't tell you that right up front, I'm telling you now. A certain percentage, and it's usually around 12%, if you stay really tight with the system, and they're just not going to evolve into winners. And I can't tell you why, but it is due to some other force that we're not looking at. Now, here's the move up. It's 1021, 92% at the money over 4 days, out right here on CHOP. Now, we advertised that we created a new indicator, and we did. And it's called price acceleration, and it's like nothing you've ever seen. Now, we have not officially released it yet. We beta tested it last week. It gives us a tremendous additional advantage in trading, but I didn't have time to add that indicator analysis to the slides. So that indicator is not present. But because mathematical modeling is the core of our trading method, of our software creation methodology, we're always looking to make it better. It's never a static workspace. Now here's the futures market. Signal, 221 ticks on the NASDAQ. Now last week, I got a 35-point trade. That was 140 ticks to the downside on the NQ. You're going to get huge moves. But, the routine trades are going to be the smaller trades. Maybe you'll get 20 or 30 ticks, but the likelihood of getting a winner is exceedingly high. And I'm in every trade with you. There's the scanner signal giving you the entry. Here's crude inventory report. This is a ways back, 204 ticks. Lately, crude inventory has been sort of a dud. This is a big move to the upside, out on CHOP, 204 ticks. Now here's the E-mini. This is also going back because the E-mini has been horrible to trade recently. And we know it's been horrible because it's never given us a scanner signal. And that's what's really, makes the system. When you don't have a great opportunity to get a trade on a given market, you will ensure that you don't get involved in that market because you'll never see it pop up on your scanner. It'll never give you a signal to trade. This was a 48 3/4 point move up out on CHOP, but we haven't seen them recently. There have been a few and far between great setups on the E-mini. Doesn't matter. We trade multiple markets, and the software has given us the ability to stand aside on it. Here's the Euro Pound 2-minute chart, 29 pips to the downside, 24 pips to the upside. There's your scanner right there. The 15's up, 50's up, 15's up. There's the C2 is up. Multi-time frame alignment and trend is up. We're trading along off a perfect signal. Here's the Euro Yen. I love this trade. It's 17 pips to the downside. Now, if you want to pick a market to trade over a long-term time frame, I think the Forex is one of the best. Central banks create the sentiment of big institutional money regarding the trajectory of the currency, whether it's going to weaken or whether it's going to get more powerful. They set the interest rate and they determine whether they're going to do quantitative easing, which right now is currently being done across Europe. Europe is buying up its own debt, just like we are. They're spending money they don't have. They're printing money to beat the band. So the value of their currency is pretty much fixed, and you can ride that sentiment over a significantly long period of time. And there are 12 really good currency pairs to trade every single session if you want to trade them, and I will let you know what they are. And the best time to trade the Forex is either 2 o'clock in the morning Eastern Standard Time or 7 o'clock in the morning Eastern Standard Time. Those are two great that's the European session. Open, and that's when a lot of American traders come to trade, and there's nothing else to trade. Here's the pound dollar 10-minute down 14 pips. Now, I believe it's the most powerful software trading methodology available to the small retail trader. It's taken me 10 years to create the software system you're looking at, and we're always looking to make it better. We never have a static workspace. Now, it's very intuitive. It's very easy for beginners to grasp. It works with any account size. On the futures, you can trade the micros, on all the index equities, on gold, on crude. And there's now also a micro DAX, which you could trade along with the Forex markets. The Forex, you can just trade 2 lots. On stocks, you can trade options. Does not take a lot of money to start. All it takes is success, and your account will grow. Now, I wanted to play you a very, very quick video testimonial. This is an ordained minister who lives in Broward County, who came to me. I've known him for 25 years. He wanted to make more money. He came aboard, and he's just been with us about 6 or 7 months, and he's just achieved tremendous success. And I asked him for a really brief testimonial, and he gave us one. I wanted to give you one from a guy who really lives his faith, so you know that it's accurate.
Hi, my name is Father D. I've known Mark Sachs for about 25 years. Through his organization, White Line Trading, recently I joined, and through his live trading room, through everything that I've learned over the past few months, and managing my own portfolio. I managed to increase my portfolio by 400% as a result of White Line Trading. Their expertise, their knowledge, their insight is unsurpassable. I want to thank Mark and his team for doing an awesome job. Thank you, Mark.
That's our testimonial from Father D, as we call him in the trading.
Hi, my name is.
Now, in 2020, we made over $200,000 trading options. In 2021, we're looking to make over $250,000 trading options. I don't trade many options positions because I trade a lot of. I don't take many contracts on any individual position because I like to diversify, and I have a lot of open positions. Right now, I have 27 open options positions on longer term call positions. It's a lot of open positions. Now, on the futures market, we had $162,202 on 2 contracts. We trade 6 charts: the E-mini, the Russell, the NASDAQ tends to be one of our more profitable markets. We trade crude, gold, and we trade soybeans. I like to trade in agricultural. We don't get a signal very often, but when we do, it tends to trend and it tends to run. The last signal we got on soybeans gave us a 60-tick winner and was very profitable. Now, we start the session. We open up and we project the software. I'd say about 8:30, 8:45. I get into the room around 25 after 9, and we're there for the NYSE Open. Now, it's not stress-free, but I can tell you, when you have confidence that your trade is going to evolve into a winner, you trade with so much less stress. It's not carefree, but it's a business. But there's a lot less stress involved. Now, if you achieve trading success, I mean, these are all cliches. You get financial freedom. There's no pressure. You work from home. You have no boss, no commute. But I'm telling you, there's no reason you can't achieve success. The software works. There's 500 traders trading it. Most of them are tremendously successful. You need to bring two personality traits to the table: patience and discipline, by being in the trading room with me for the first month for free. I'm going to try to bang that into you. Your learning curve is going to be geometric. You're going to learn really quick. The software is really easy to manage, and you should achieve success. Now, I just wanted to show you why I left Jefferson. That's my son, and that's me. And now I'm not a single dad. I'm a solo dad. I'm the only person who raises this boy. I wake him up in the morning. I take him to school. I do his laundry. I make his dinner. I help him with his homework. And I do it by myself. And actually, the people who help me are the other people in my business, are the people who I work with. Rory, Sergio, all the other people, they give me more help with my son than anybody else. And the only thing that allows me to not only take care of him, but to be his baseball coach. And I was his Little League baseball coach. That's the assistant coach. We're on our second season, is the fact that I've mastered this discipline. And it really gives me tremendous time flexibility. And it allows me to be the kind of hands-on dad that I want to be. And that's why I left my academic position, because I needed to come down here to take care of my son. And I needed to, I needed to be, I needed to have him move in with me and take care of him. And he was just a little whippersnapper when I did that. Still a little whippersnapper. Now you have two options. On Monday morning, you can continue down your present trajectory. If you want to open up your charts and trade the same stuff you've been trading, if you're not making money, it's unlikely you will. If you're making money, maybe I can help you make more. Or you can take action, because this is going to be a tremendously advantageous offer. And you can change everything on Monday morning. You can join a successful community of small retail traders. We're all incredibly supportive of each other. And we try to help each other, because we know of the 500 traders, so we trade shoulder to shoulder with. There are tens of thousands of traders out there that we're up against, who we have to beat so that we can go home profitable after every trading session. Now, if you're not one of the first 10, the software offers $9.97 per year. You need no promo code to enter. Or if you click the link, you don't need anything. And you will get an ebook I made. That's the gift. It's really a great ebook. It's about 20 to 25 pages. I can't remember. We used to sell it for $7, and we sold a lot of them. But it's going to help you trade. It's going to give you great trading tips, and it's going to teach you a lot about how to create the best options position, depending upon what you want to do. Go bullish or trade bearish. Here's our phone number if you just want to see it up front. Now, everyone is going to get a rapid results quick start guide. If you're technically inclined, it's going to walk you through the software setup. If you're not technically inclined, Sergio is going to do a white glove installation on Monday morning. He's going to log into your computer and do the setup for you. If there's any technical issues that arise 6 months from now, 2 years from now, Sergio is here all the time. He will fix it for you. I don't want tech to be an issue that's ever on your shoulders. You and I are going to worry about trading. We're not going to worry about any of the technical aspects of the software. It's his responsibility. and you're going to get great support from us. I am always here to help you. And you try to call anybody else who gives one of these webinars and talk to them. I mean, I listen to 2 or 3 webinars a week of other traders. You can never talk to the person who's giving the webinar. What you get if you call is you get a sales desk. What you're going to get if you call here is you're going to get Rory, and he's a terrific trader. He's going to help you with whatever problems you have. If you need me, I will also help you. If you need a one-on-one session, I will help you with that, and I will not charge you anything. I really feel that if you put your trust in us, we have a mandate to do everything we can to make you successful. So we are always there to help you. Now, if you're one of the first 10, you're going to get a lot of additional software. First, you're going to get the scanner for life. You're never going to pay us again for it. It's a $9.99 standalone. If we tweak the software, add an indicator, change any settings, we have to upgrade your scanner. And we will do it for you for nothing, no charge. You're also going to get the battle room. That's a 1-year series of master classes that they meet on Tuesdays. They're supposed to go 1 hour. They usually go 3. And we go through everything in the battle room. This is where, in a live market environment, we look at trading stocks and options for 6 months. Then we do 3 months on futures, 3 months on Forex, in sort of round it off. We always leave enough time at the end of the 52 weeks to do cryptos. And we really do a very, very detailed analysis. I teach you how blockchain technology works. It's exceedingly important to understand blockchain technology, because more and more companies are going to incorporate it as part of their technology that are not cryptos. And they are coming up all the time, and it's the future. You must understand blockchain technology. Now, this is just, we look at small caps in the battle room. We look at cryptos. We look at swing trading, options trading. We look at everything. Now, you're also going to get 3 months of my options alert newsletter. There's one going out on Sunday night. That's the major newsletter I send out. Now, I give you exact entries on a limit order, and I manage the trades with you. I take the trades when you take the trade. I'm not in ahead of you on the trade. I don't take it on Friday and give you the entry on a Sunday night. I am in with you, and I'm out with you. You're going to get the exits if they occurred in the middle of the day. You're going to get an SMS text message. If you're overseas, you'll get your message on WhatsApp. So the system is integrated with WhatsApp. We put your WhatsApp number in there. It will fire you the same signal to close the trade or open a new trade. If I see something in the middle of the day, or I get a signal, you're going to be trading with me on options. And I'm a really good options trader. I have to tell you, all the things that I do, futures, Forex, and stocks, I think that my number one calling is trading options. And it's probably based on my training in math, because options has a lot to do with math, configuring optimal entries and looking at probabilities of wins and deciding whether you want to take a bullish position or a bullish to neutral position. All important metrics to determine when taking an options position. We're extremely profitable and successful trading options. So here's the deal. If you're one of the first 10, it's $9.97, and it's a lifetime purchase. When you get it, it's yours for life. We're never going to charge you another dime for the software. We are rolling out a brand new analysis on Monday. You are going to pay nothing. Everybody else on the $9.97 per year offer, and we have a ton of people on that offer, are going to have to pay for that upgrade and that add-on. It took us quite a significant period of time to conceptualize it, and then actually create an indicator and then code it. And that's what we base the price on. And I'm not exactly sure what we're going to charge for it yet, because we haven't sold it. How we haven't sold it yet because we haven't rolled it out yet. But we know it works. Everybody in the trading room wants it. And whether they're going to get it for free or pay for it depends on the offer they received. You don't have, again, there's no promo code. Now you're going to get the market scanner for life. When we change the software, we have to change your scanner. You're going to get a year in the battle room with me. And let me tell you, if you need to catch my attention and you have a problem trading, it's a great place to do it. You're still welcome to call, and I will still, or the office, and I will still help you here if you need it. Now, that's going to roll over in 1 year. You got 52 weeks to worry about the rollover on that. You're going to get it at a really distinct discount 52 weeks from now if you want to stay for a second cycle. The only thing you really have to think about is whether you want to stay aboard on the options alert, on my options alert newsletter. That's 90 days down the line. I think I trade options incredibly well. 85% of our traders stay aboard, but you do not have to. If you want to stand down, you are more than welcome. Not, if options are not your thing, I think what should be your thing is to make money, irregardless of what financial instrument makes it for you. If you need to learn how to trade options, I'm going to teach it to you in the battle room. There's nothing wrong with expanding your investment horizon and broaden the way that you make money. So I wouldn't be dogmatic or stick with any particular venue. As if it's successful, take hold of it and grab it. Now we got so many complaints that we just threw it in. It's not even on the slide. You're going to come in with me for 1 month in the live trading room, and you're going to watch me trade, or you can take my trades. Be very careful if you decide to trade live on day 1 or 2. I would advise that you sit and you wait, watch a couple of days, then you can take my trades if you like. Just piggyback me. I call them out in advance. My targets and stops are all projected. You know exactly what the P&L is. After 1 month, it's going to be your call as to whether or not you're going to stay. If you do stay, it will roll over at a much reduced price. It's $249 a month, but you're going to pay much less than that on a rollover. Personally, I think it's worth the price of doing business because I'm going to be able to do a lot of things to help you in that room. 1, you're not going to overtrade. 2, you're going to get input from 500 other traders. And being in with a community of traders is very, very helpful. And you're really going to get an educational session after every trading day. You also get that special ebook. Now, the last slide I'm going to project is if you're interested and you just want to ask one more question, I'm going to answer all the questions I can. I don't know if I've run over time, and I really thank Lee for letting me talk. I don't want to take up too much time. I'll run over, but the first 10 who come aboard get that very special deal. You want to lock that in. You put your name and your phone number in the chat. Rory will ultimately get it, and he will call you sometime today, unless you give him a message to, call me on Monday, whatever you want. But you will lock in one of those first 10 positions. Even if you're the 27th purchase, if your name and number is in the chat, or your name and Skype is in the chat, and I just would appreciate if you don't put in your Skype. We'll call you on it, but I'm sorry, you don't put in your WhatsApp number. It's a lot tougher to get a hold of you on WhatsApp. Very easy on Skype. So name and Skype or name and phone number if you're United States, and you'll lock in that. That's the best deal. We're not telemarketers, and we're not going to call you unless you let us call you. You have to give us an invitation to call. Otherwise, we are never, ever going to bother you. And if you decide not to come aboard, no harm, no foul, you have no obligation. And, we will part ways, complete friends. So just let me see if there are any questions. If I can find the questions box here. Oh, here it is. I got it. Okay. I think I have it. Let me look. Okay. I got it.
Hey, Mark, if you don't see him, I can ask you the questions.
I'm sorry, I just lost my audio. Okay. Actually, these questions are for Adam. Okay, here we go. Okay. Well, I mean, we just got a lot of phone numbers here for Rory, and all the questions have been answered by our moderator. So there's really nothing more for me to say. I don't want to take up any more of your time. I really appreciate giving me the time on a Saturday afternoon. I know your time is valuable. Listen, I wish you the best of luck. I want you to make money. Use the weekend to relax, kick back. Hopefully together, we will tackle the markets on Monday. And after doing this for 10 years straight, I'm always excited and have a tremendously positive anticipation of the outcome every time I sit down every morning and open up the charts. And Monday morning is my favorite because we're rested and we're ready to go. Again, thank you for your time. I really appreciate it. Have a great weekend, and I wish you the best of health and success in trading. Take care, everyone, and have a great weekend. Bye-bye.
Okay, folks, I can't say it better than Mark did. So everybody have a great weekend, and every company can be reached. Thank you, Buyside Global and Rightline and 10-minute trades. I'm Lee Goldstein, the trading director. Have a great weekend, folks, and we'll see you in the trade room. Take care, everybody. Thanks for coming.